market stuck with the call for September.
Order
filled. Percentage points for September went into no change. And then it backed off the outlook for cuts in October and December. So take it at face value, suggests the Fed cuts in September is where the market price, and then potentially pauses in October to see whether more inflation comes through from tariffs, but almost certainly cuts again by December. So 2 cuts are priced in, but when that second cut happens is a matter of debate. After we get the 8:30 data, stick around for our exclusive interview with Chicago Fed President Austin Goolsbee. A quick note on import prices. They are the price before tariffs. They've been flat, suggesting foreign exporters as a whole are not paying the tariffs. Yesterday's PPI gave us some suggestion that maybe the producers are absorbing more of the tariffs. Right. The CPI told us that some of the tariffs are coming along. Right. It's going to be there. But we had Musalam on yesterday. He said, look, this is like a 9-month process. Yeah. He said 3 to 6 months for the tariffs to come through, 6 to 9 months for them to work through the system.
Yeah, to go from producer to corporation to consumer. Journal has a good piece. I took issue with this when I told Andrew that perhaps this is one reason Wall Street reacted badly to the producer price news. S&P was up to a new high.
It didn't react badly.
Dow Jones was down 11. Dow Jones up 300 a day. Yeah. S&P. That's just what they wanted. Sometimes they say things that they just... Yeah. But what they did point out was it's bad if real wages stay the way they're stagnant. They've been stagnant for 3 or 4 months, and that's what people feel are real wages. And if we don't get enough...
That's a good point.
Isn't it?
It's an important point.
It is, because that's where...
This is the job of investors right now. Not that the tariffs are not going to have an impact, but to figure out where they're going to have the impact, right? You're going to do, what are we talking about, $300 billion here. It's coming from somewhere, but wait, there's some being given back and some incentives given in the tax bill that help. Yeah. I spent all night literally looking.
Some of it might be from foreign.
Well, exactly. I haven't seen it yet.
How much.
The import price data should give us some of that.
That's 8:30, right?
That's 8:30. That's why I think it's one of those things that, when's the last time we talked about import prices? Nobody ever cared about it, but now it's going to tell us some of where...
You cared.
In the tariff triad.
Say nobody. You
exactly.
cared.
I do care. Thank you. But the thing is that I spent last night trying to pore over the PPI. I don't know if you remember my final statement at 8:30. I said, there's this anomaly in the service sector in the margins. I don't understand why margins rose, actually. One really complicated explanation from this professor who wrote to me after that appearance. He said, if you have inventory, right, and half of the inventory is at the old price and half of the inventory is at the new price, and you're selling at the new price, your margin would go up until you run out of the old inventory.
Okay, yeah,
and then, so you could have this margin surge. Some people were saying there's gouging going on. They use the opportunity to pass it along. But the other thing is the capital goods thing. They're buying a lot of equipment now for this AI thing. So that's showing up. There could just be un-tariff-related inflation.
And maybe the immediate expensing and the immediate expensing thing.
That's another issue we're going to have to watch. You could have some of that. But then you get the situation where you have some of these goods are tariffs. So that could be something that curtails it.
Well, it'll be interesting to... think Austin will tell us who he wants?
Oh yeah, he'll give us a list. He'll rank them in the top 5, for sure.
No,
sarcastic.
Oh. Do you think he would admit the possibility of a guy with a ponytail could be Fed chairman?
Do you think America's ready for a Fed chair with a ponytail?
Andrew said to God, no way.
And those suits he wears, are they ready for that?
No ponytail, Fed chair.
I said in the context of the sort of like straight out of central casting.
Andrew, can you imagine? Next time he's on next time he's on the exchange, he comes in with a haircut like it. We know he wants.
I don't want to judge somebody about the way they look.
Oh, stop being so PC. That is so 2020. It's so pre-Trump.
Zervos and I had a debate yesterday on the 1 o'clock show, and I asked him. I said, well, I got to ask you the most important question. He said, what? I go, will you still pick on me at the press conference?
All right, well.
I thought you were going to say, will you cut your hair and shave your beard?
Both Powell and Zervos go to Dead & Company shows.
They do?
Yep. I hung out with David at one.
Dead pretty much transcends everything.
Everything. Got your Republicans, got your Democrats.
Yeah, exactly.
Thank you, Steve.
Except for Andrew.
Happy.
I
like fish.
fish.
You do? I like fish. Yeah. I don't like when they try to sing. I really don't. Just play, man. Jam.
Yeah, jam.
Fluffhead.
Okay, coming up, safety protocols at Roblox coming under some fire. One state now suing that company. We'll bring you the story next as we head to a break. Check out the early S&P 500 winners and losers. Squawk returns after this.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
For type 2 diabetes, once-weekly Mounjaro could help. 3 out of 4 people reached an A1C of less than 7%. And people lost up to 25 pounds. Don't take Mounjaro if you're allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Stop and call your doctor right away if you have an allergic reaction, a lump or swelling in your neck, severe stomach pain, or vision changes. Serious side effects may include inflamed pancreas and gallbladder problems. Taking Mounjaro with a sulfonylurea or insulin may cause low blood sugar. Tell your doctor if you're nursing, pregnant, plan to be, or taking birth control pills, and before scheduled procedures with anesthesia. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and may cause kidney problems.
I can do diabetes differently with Mounjaro.
Pay as little as $25 per month. Ask your doctor about Mounjaro.
September 16th, CNBC teams up with two-time NBA champion Kevin Durant and Boardroom for Game Plan, exploring the business of sports, music, and entertainment. Register now at cnbcevents.com/gameplan.
You can escape to a tropical paradise to savor the scent of pink sands. Or you can enjoy it from the comfort of your home with a Yankee Candle fragrance. Yankee Candle, the scent you've been seeking.
Honey Bunches of Oats presents Teens.
Okay. No.
Maybe if they ate bunches of oats, teens would use more than one syllable. Don't just eat oats. Eat Honey Bunches of Oats.
Very pretty shot of New York skyline. Meantime, we are watching shares of Roblox. Louisiana's Attorney General suing that company yesterday. The stock, it's been a pretty picture, but not just yesterday, accusing it of failing to implement strong safety protocols and making it, quote, the perfect place for pedophiles. It says the lack of age verification allows adults to pose as children and kids to bypass controls meant for users under 13 years old. The gaming company previously has been slammed for sexually explicit experiences discovered on the platform, including ones called Escape to Epstein Island and Diddy Party. A spokesperson for Roblox saying it dedicates substantial resources to help detect and prevent inappropriate content and behavior. The company currently facing a storm of controversy after it banned a self-described predator hunter and defended its removal of vigilante users. Those users have posed as children and actively sought to connect with adults on the platform and expose suspected predators. One banned user with the username Schlepp claims to have helped authorities arrest 6 Roblox users who appeared to be child predators. In a blog post on the website, Roblox saying that the vigilante's methods violate its terms of service and bypass its own safety systems. It urges users who have safety concerns to use its reporting channels so it can investigate quickly and use its technology to try to capture details about what they're calling suspicious actors that a simple screenshot cannot. So it's a tough one. By the way, my daughter and my sons used to use Roblox a lot. My daughter still does. She's younger. I worry about all of these things, as you might imagine you would. I think they do a pretty good job on the whole. I think the worst part about this is we're living in an era, and it's not, I don't want to suggest this is just going to happen and defend the company. The question is, you know, can you get it to zero? I think it's going to be very, very difficult. Should you be trying to get it to zero? 100%.
And it's, the names change, but I mean, do you remember the, I think it was an NBC program. It used to be To Catch
To Catch a Predator.
Yeah, it was Chris, what's his name? He was great. And it you know, it was so compelling to watch because they'd just bust, the person would walk in and there'd be cameras. He'd be like, I mean, it was, but it opens up your mind to, you know, to a place you really don't want to go.
No, it's terrible. And the worst part is, you know, it's like if you set up a park with lots of children and there are bad people who want to go to the park. I mean, that's the thing. I mean, I thought about this in the context of Roblox. I was recently thinking about it in the context of Uber just last week with that story, you know, where they were saying that there are people drivers who are taking advantage of passengers. And on the whole, it's, you know, 99.9999% of the time it doesn't happen, but then it does. And the question is, you know, how do you prevent this stuff?
Do the math on, you know, 0.1% with the number that you're talking about.
No, I know, and that's the issue.
Right. Coming up, President Trump heading to Alaska today for a high-stakes meeting with Russian President Putin. We're going to take a look at what's on the table and some of the potential outcomes from this Senate. Council on Foreign Relations President Emeritus Richard Haas will join us next. Squawk Box coming right back.
Decking and railing that stands up to whatever you ask and bends to your every whim. Trex, performance engineered for your life outdoors.
Leo, he's there when we wake up, he's there when we leave, he's there whenever we come back home from school. He's just there always.
Mash it up, doofus.
Ever since we introduced him to the farmer's dog, his quality of life has been forever changed. He prefers real, human-grade food.
It's like real food. It is. He's a happy dog now.
He's a happy dog. He's a happy dog.
Rather than get rich quick, I believe in get rich slow. The high-yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
We were built for Ulrich, to lift him up, because when twisted legs and hurtful stares kept him from reaching his potential, we became his support. Every engine and motor, each hand and mind, focused on fixing his legs and lifting his heart, because we were built for Ulrich.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
The premiums were getting unreasonable.
We just didn't need the coverage anymore.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
When I started Walton Goggins Goggle Glasses, I had no idea what I was doing. But GoDaddy Aero does, using AI to build a logo, website, and social content. So I can let the world know if your goggles ain't Goggins, they don't belong on your noggins.
Overtime's about understanding what just happened in the markets that day and preparing for tomorrow. I'm looking to talk to sophisticated investors, beginning investors. I'm always learning.
Closing Bell Overtime, weekdays 4 Eastern and streaming on CNBC+.
President Trump heading to Alaska today. You're looking at a live shot of Air Force One getting ready to take off. Bring the president along with a host of members of the cabinet, including Marco Rubio and others. Lutnick is on the list. Scott Bessent's on the list, and they will be meeting with Russian President Putin later today. Of course, they'll make up time in the air as the time difference helps them. For a look at what's on the agenda, want to bring in counsel on foreign relations President Emeritus Richard Haass. He's now a senior counselor with Centerview Partners. It's good to see you. We saw each other just a week ago out in Aspen at that economic group's gathering, and it was fascinating. I'm curious, Richard, in terms of how this conversation goes, how much of it will ultimately be about Ukraine and how much of it turns into a discussion about so many other sort of geopolitical chess pieces, if you will, the relationship between India and Russia, China and Russia, business issues, et cetera?
I think it would be best if it were mostly or exclusively about Ukraine, because I worry about linkages and trade-offs. But you just described the American delegation. If you have the Secretary of Commerce and the Secretary of Treasury, that obviously suggests a broader agenda. The Principal Arms Control Agreement between the United States and Russia is due to expire in about half a year. That's a big issue. And then again, you've got any number of potential economic issues that could be put on the table. So again, my preference would be to keep it narrow, but my sense is it's going to go broad.
So if it goes broad and you get into this trade-off scenario that you're describing, sort of play out the permutations with which that conversation takes place, and to the degree you think that they can walk out of there and claim success, what that looks like.
Well, the danger is, let's take a step back. Some might say the opportunity is President Trump is conducting a foreign policy where across the board, Andrew, I think it's fair to say that economic issues have a degree of primacy that we haven't seen in recent history. So imagine the Russians were to put on the table certain economic benefits to the United States, exports, say, of rare earths or something like that, or certain trade possibilities. The question that opens up then is what the United States might be willing to trade for that when it comes to the principal issue of this summit, which is Ukraine. And that's what has some people worried. And it's against the backdrop, I'll be honest with you. We're even putting aside this larger agenda. There's concern about the American approach to Ukraine. I think it's important to remember that on that issue, President Trump, understandably, his priority is peace. Vladimir Putin, his priority is to win the war. And that sets up a very different set of calculations between these two leaders.
So many different angles on this, like with everything, Richard. Do you think that we should be welcoming Vladimir Putin to American soil? In an absolutist world, given what's happened, just watching on a daily basis what happens in Ukraine, there has, and I'm not making the argument, but the argument has been made that's almost immoral to welcome this man to American soil. But then on the other hand, do you remember in previous administrations, the Obama administration would be criticized for meeting with Ahmadinejad, and they'd say, you gotta talk to these people, no matter what they do. If you don't talk, then you're just saying the only option is some type of armed conflict. Where are you on this?
I think it was Yitzhak Rabin, the former leader of Israel, who once said, you have to make peace with your enemies, not with your friends. And that's when he was getting criticized for meeting with Yasser Arafat. And I think I've always thought, Joe, that diplomacy is not a favor we bestow on others. Diplomacy ought to be seen as one of the basic tools of national security. We don't want to have to turn to the military tool all the time. That said, in this case, to invite Vladimir Putin to the United States at a time when he's essentially seen by much of the world as a war criminal for his behavior in Ukraine. And by the way, since Donald Trump's been president, Putin's behavior has gotten worse, not better, in terms of his attacks on civilian targets. I'm not sure I would have given him an unconditional invite. Unless there's something we don't know, I would have been willing to do it, but only if in advance I had certain understandings with Putin to essentially justify giving him this something of a get-out-of-jail-free pass for this meeting.
And then I was thinking, it's bad to mix, economics or pragmatic rationales for dealing with something like this. But, take Syria. We had a red line in Syria where we weren't going to let anything happen. We make things that we can't stand up to anyway. If we do it absolutist, maybe the pragmatic approach and to do something which is where you just, you're not in this idealistic sort of bubble and where there are economic concerns that, they're going to be around no matter what, whether you're an idealist or not. And maybe you're just being realistic.
Fair enough. And, what we did in Syria, the calling out the red line with the Syrians in the Obama years, and then saying never mind was a disaster. The United States lost all sorts of credibility. Our reputation took a major hit. But I take your basic point, and the devil's going to be in the details. So I'm not going to sit here and tell you any agreement that involves economic trade-offs is necessarily flawed or unprincipled. But let's see where we come out in Ukraine. And I think it's essential that Russia not be rewarded for acquiring a territory by force. It would send a terrible message to them. I think the Chinese would take note and say, thank you very much. Let's now apply that to Taiwan. Right. The one thing that I think is really missing here, and again, I applaud the president's interest in peace and diplomacy, is I don't think he's setting it up right. He and the vice president have distanced the United States too much from Ukraine. And if you really want to incentivize Vladimir Putin, far more significant than any talk of secondary sanctions against India or anybody else, would be a clear commitment of American support for Ukraine. Long-term economic, military, and intelligence support, potentially different types of security assurances. That would tell Putin that more war will not give him more results, that time is not on his side. We've been unwilling to do that. And that's the biggest problem with the American strategy, even more than potential trade-offs, is we've not set the table right to pressure or incentivize Putin with pressure to give us what we want, which is that he would essentially agree to compromise. Right.
Hey, Richard, I'm going to, a bit of a curveball of a question this morning, but it has a geopolitical implication, I think. Joe and I have been having a bit of a raging debate. Really? About the idea that the White House...
I thought you were agreeing with me.
Hold on. That the White House might take a stake in Intel, which to me is something that is relatively unprecedented for the United States government to do when it's not in a crisis. Meaning we've taken stakes in...
But is it?
In GM and Fannie and Freddie.
Are you sure it's not?
During a crisis. And the point that I've made is I wonder what this does geopolitically. We've been trying to export this brand of free market capitalism for a very long time around the world. We've been very critical of the idea of national champions when other countries have done similar things.
Order filled.
Order submitted. The implications of us taking a stake in Intel could or would be to that, and what your otherwise sort of, first thoughts are as you wake up this morning hearing this news.
Andrew, I'm old enough to remember when Republicans, and I was one for 40 years, believed in small government, particularly when it came to the economy. So I've got to tell you, my comfort level is not high with all these participations, be it U.S. Steel, potentially Intel, NVIDIA, and so forth. I think it clearly makes it more difficult to us to talk the talk with others if we're not walking the walk ourselves. I also think it may make us more of an advocate as a government for selling things, say, to China or others. And that, to me, suggests that export controls are going to be fast fading as a tool of American foreign policy. It's going to be impossible to pressure our allies not to sell certain things if we're going to want to sell them ourselves in order to get a cut for the U.S. government. So I'll be honest with you, for lots of reasons, my comfort level with this is not high.
Do you see this as generational? Jeff Bezos likes to talk about what he calls one-way doors and two-way doors. You can make a quick decision on something. It's a two-way door because you can always go back out. A one-way door is a decision that has long-term implications. And I wonder how you think about that in this context. The reason I mention it is, we were also talking about tariffs this morning, and I was making the point that I think these tariffs are here to stay potentially for decades, even if you get a Democrat or some other politician who doesn't like tariffs in office down the road, because they're going to look and say, well, we're collecting $300 billion. It's built into the budget now. We're stuck. Similarly, if we own a stake in Intel, it's hard to get out of that. And also sort of the message that sends to other countries, to the extent it does, is something that I think lasts. It's not something that, just goes away with a different politician in office.
My philosophy would be I would hope they were one-time temporary decisions, whether it's tariffs or government participation with some of these companies. But given where the Democrats are, we right now have both parties essentially agreeing more than disagreeing on these things. Free trade is you're going to see a postage stamp with free traders on it because they're endangered species. Both parties now, I think, are somewhat supportive of tariffs. Both parties are somewhat in support of industrial policy. So my guess is, Andrew, and again, I'm not wild about it, is that some of these things are going to be more lasting than temporary.
And they still could be one-offs to some extent, except if I can take the idea of national security, I can go a lot further than just strategic metals, chips, pharmaceutical, constituents and things that I could probably come up with 10 things you could make the case that we need to be able to do it here.
Fair enough, and I think that's a legitimate public conversation, given supply chains and other considerations.
Right.
What is our list of things we have to be sure that we have access to?
Right.
And what things do we have to produce here?
Would it be better to do a guaranteed, we were talking about Solyndra. So we guarantee a loan, it goes bankrupt, shareholders lose or taxpayers lose $500 million. Maybe it'd be better to have a stake that you could actually, we have in some of the past involvements that we've had with the automakers or others, we've made money.
I have a word for you, Joe. It's called Amtrak. The idea of government stakes doesn't fill me with great degrees of...
I got another one for you. Airbus, been great for everybody.
Exactly. So again, I think it's one thing to say there's certain strategic items, minerals, what have you, we have to have assuredness with.
Yeah.
And we can
you're on Amtrak. How much? You're on there every week, Koss, so don't start trashing Amtrak. I know you're on that Acela, having that bison chili in first class. We gotta go.
Okay, Richard, we gotta go. Have a great weekend. Squawk coming right back.
Meet Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart along the way.
We make coffee that supports our community.
And Walmart's played a big part. You know most of what Walmart spends goes to products made, grown, or assembled right here in the U.S.?
So we can invest back into our community.
Walmart, huh? Who knew? Now you know, Jerry.
And that is how you brew a mighty fine American business.
When I started Walton Goggins Goggle Glasses, I didn't know how to turn all this fancy prettiness into a classy-looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
Investing. You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. You're not a child playing a game. This is grown-up business. The real thing. You know wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
Hi, I'm regional commercial actor Neil Patrick Harris. I love Rise Mushroom Coffee, and not just because I look good drinking it.
Hello there.
I also like the improved focus and all-day energy. Plus, it's easy on the stomach. That's because we use only the best organic mushrooms, like Stumpy Warthog, Bird in the Bushes, and Found a Hair in Marsupius, which sound like made-up names because they are. Rise Mushroom Coffee. Drink it cold or hot, like me.
There's some things that work better together, like your workplace benefits and retirement savings. Voya helps you choose the right amounts without over or under investing, so you can feel confident in your financial choices.
Voya, well planned, well invested, well protected.
flavors. There's an H-E-B Creamy Creations flavor for every craving in Texas. Just one more reason. Here, everything's better.
Once upon a bedtime, the newest Disney Princess collection arrived at Rooms to Go Kids with iconic beds starting at $477, crafted with golden accents, LED lights, sparkling canopies, and more.
Order
room
filled.
is full of magic. Every night feels like a bedtime ball. Each day, a new adventure. Creating a fairy tale escape has never been easier. With fast delivery and expert setup, you get the royal treatment. Happily Ever After starts here. Shop the Disney Princess Collection at Rooms to Go Kids.
Thanks. Coming up, mortgage rates falling to the lowest level of the year. We'll find what this means for the real estate market with housing analyst Ivy Zellman. Squawk Box returns in just a moment.
Rather than get rich quick, I believe in get rich slow. The high yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
Do you want to know where to invest $1,000 right now? Well, forget about AI, quantum computing, electric vehicles, cryptocurrencies, or robotics. A little-known technology is projected to become roughly 10 times bigger than all of these technologies combined. The World Economic Forum says that it's arguably the most exciting human discovery since fire. And billionaire entrepreneur Vinod Khosla says you can make 1,000 times your money by investing in this phenomenon. But if you want to claim a stake in this revolution, you have to act fast. We're about to cross what Barron's calls an impending tipping point. So do you want to know how to get started with this technology? Go to the website on the screen, and I'll show you how. Hi, my name is Whitney Tilson. I'm a former hedge fund manager. I've been featured in virtually every single major financial publication and TV show. How did I accomplish all this? I'll tell you this, I don't come from money. In fact, my parents were teachers who met in the Peace Corps. The secret to my success is that I have a knack for finding explosive investments in massively disruptive technologies. I bought Amazon in 1999, I bought Apple in 2000, and I bought Netflix in 2012. Investments like that helped me grow my hedge fund from $1 million to $200 million and nearly triple my clients' money. The technology that just landed on my radar might be the most disruptive and lucrative one I've ever seen. One market insider predicted that it could be even more important than the Industrial Revolution. And I want to give you, free of charge, the name and ticker symbol of the company at the center of this disruption. You don't have to give me your email address, your credit card, or anything like that. Just go to the website on the screen, now.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
Almost 8 a.m. now on the East Coast, and you are watching Squawk Box.
That's a beautiful image. Can we just say that?
On CNBC. It is.
It's a beautiful plane.
It is
I like
a beautiful
that plane. I know we're going to try to upgrade the plane to a Boeing.
I'm Joe Kernan, along with Andrew Ross Sorensen. Is Boeing still there?
Still the Boeing.
Yeah.
I prefer that over the Qatari plane.
It's a Boeing. It's a 747.
Well, I know, but I'd like the full-on new one.
All right.
What I'm talking about.
You take any of them on it. You were talking about your Gulfstream. The only Gulfstream you have is like the one I have. It's about
my model. It's a little
foot and a half long. If we're flying our Gulfstream, we're going flying it around our room. Among today's top stories, President Trump is heading to Alaska today to meet Russian President Vladimir Putin, boarding Air Force One just moments ago, uneventfully apparently, which is an uptick. This will be Putin's first visit to a Western country since Russia invaded Ukraine in 2022 and his first trip to the U.S. in 10 years. The two presidents will discuss the Ukraine war at a military base in Anchorage, and as we have pointed out, we've got Commerce Secretary along for the ride and a Treasury Secretary. And it just makes you wonder how many different things will be discussed.
Is it a 4-hour time difference? I'm trying to think how much time they can make up in the air.
Probably is 4 hours because it's...
Order filled.
Order filled. I think it's 4 a.m. right
Order
now
submitted.
in Juneau.
It's 4, Hawaii's 5. Or, I don't know, because of the daylight savings. I'm not sure, maybe not anymore.
So if they leave at 8, they get the time back. It's got to be a 6 or 7 hour flight, right?
You mean not including the time change? Got to
right.
Be. Yeah, got to be. Watch and see if anything's going on. Doors shut, probably ready to go. Shares of United Health helping the Dow futures this morning. That's something that I wasn't actually thinking. Yeah, definitely. That's why it's up 278 points on the Dow. A lot of it right there. New regulatory filings show that Warren Buffett's Berkshire Hathaway took a new stake in the troubled health insurer last quarter, buying more than 5 million shares. That stake now worth about $1.6 billion. It's Berkshire's 18th largest position. And on the economic front, data on retail sales and import prices due at 8:30 a.m. Eastern, and we are more excited about that than normal. We're going to bring you the numbers and then a special interview with Chicago.
More excited about that than normal.
Import prices.
We should be excited every time those numbers come out.
We definitely
Order filled.
Order filled. Definitely take on more significance with tariffs.
I'm excited about this guy, Goolsby.
And Austin Goolsby. Exactly. We'll see. Someone's writing in that how can he flip back to not wanting to cut? I haven't seen that he's done that, so we're going to get once and for all find out because he's been dovish, more dovish than some of the other people. Let's check the futures this morning. We mentioned the Dow up about 273. Yesterday, the Dow ended up down 11 when it was all said and done. The S&P actually gained yesterday, another new high. Treasuries also, if you're looking for the end of the world, we were at about 420 on the 10-year yesterday, so we're almost back to 430. A little bit of movement, but we're not back at those levels where people said you need to be concerned. 4.5 on the 10-year. I think we were at 5, worried about 5 on the 30-year. And 4% or so on the 2-year. For more on the markets, let's get to Mike Santoli. He is at the New York Stock Exchange, and that's about as casual as Mike gets. Yeah.
This is it. I'm pushing the limits of August
on
casual
Friday.
Here, Joe.
Yeah,
on
Freaky
a
Friday.
You might see some colleagues here with no tie on. That's not gonna be me. But quiet start on the S&P. You mentioned the Dow. It's got that move driven by UNH. Holding near the highs is basically the story for the broad index here. Actually, also on the cusp of a 10% year-to-date price gain at this point, which obviously is pretty good given the volatility we saw in April. Now, the equal-weighted S&P is only up about 6%, so obviously the largest stocks contributing the most, but clearly worked our way back toward the flat line, as you said yesterday, after that immediate reflex reaction lower on the hotter-than-expected PPI. A lot of folks not really seeing that carry through to a hotter PCE inflation index or to necessarily changing too much about the Fed equation. We'll hear what Austin Goolsby has to say about that. Now, the interplay between the small cap Russell 2000 and the mega cap growth driven NASDAQ 100 has been a key. This is just a 5-day chart. You see the Russell shot higher on that cooler than expected or cooler than feared CPI. Gave some back yesterday, maybe giving some back today, but this has basically been kind of this rotation that's kept the overall market supported. If we think we're getting rate cuts or more rate cuts soon, Russell 2000's lower quality, more cyclical, they're going to bid up. If it's more defensive, then you go back to the AI-driven NASDAQ 100. It's worked well. At some point, this harmony kind of breaks down, but not yet, I would say. So talking about UNH, look at the overall sector in which UNH operates. That's health providers. That's what the IHF ETF is. This is a 5-year chart. You see how it was tracking the S&P 500 for a while, and then a couple of years ago just falls away. The economics of the business very challenged, obviously not getting fully compensated for medical costs going up, premium pressures, all the rest of it. So you see a lot of hedge funds, in addition to Berkshire Hathaway, deciding that it got just too cheap as a group, and some of the other stocks besides UNH are also going to get a lift today. We'll see if that has legs.
So the muted response to what was the sum of all fears, I think, for people that are worried about tariffs that happened yesterday. Nothing happened in the market. Do you think people think that PPI is volatile and not to read too much into it? Or do you think that this market with AI and everything else, it's not all about inflation and tariffs.
Well, I think it's both of those things. First of all, PPI, not just volatile, but the parts of PPI that were the most skewed to the upside, things like portfolio management fees, which is just a, kind of not really a cost. It's sort of an inferred price based on how high portfolio values go. Some of the used car stuff has been noisy. And so if you just extrapolate what that means for PCE, maybe not as alarming. I also just think in general, the tariff impact is maybe getting to be pretty diffuse. Maybe there's a lag to it. And so the market realizes that at some level, maybe it can be contained to certain areas of the equity market because you have the earnings driven by other secular trends to lean on. So for now, I do think the market's kind of looking on the bright side of this, but that's not to say it's implausible.
Right. October's coming, too. All right. And September. Thanks, Mike.
Yeah.
Okay, coming up, from mortgage rates to record high home prices, a look at what it could take to thaw the frozen housing market. We'll discuss that, and then a very big weekend in the Monterey Pebble Beach area. You don't want to miss this. Auto enthusiasts gather for one of the priciest car auctions of the year, and they take a look at one car that could fetch $20 million. If you care about cars, if you just like to gawk at them, stick around because we've got some pretty cool stuff to show you.
Word on the street side, make it look easy. I'm flattering, cool, way too easy. Word on the street is I make it look easy. I'm actually smooth, it's far too easy. Word on the street is I make it look easy. Too easy.
This is Buddy. I've never met a dog like him because there's never been a dog like him. Every dog is unique. That's why at the Farmer's Dog, we put your dog at the center of everything we do. With food that's freshly made, to human-grade safety standards, in personalized portions. It's packed with all the nutrients dogs need and delivered right to you. We just want to make it easier to take care of everybody's buddy.
Seabeds. Your company started in the kitchen.
Hello?
Now it has 3. Your team of 5 grew to an army of 500. And that's your logo, right there in marble.
That's big.
To grow your business from big to bigger, you need an advisor built for the middle market.
Our data shows that this deal works. Interesting. Very interesting.
Accounting, advisory, insurance, and more. Seabeds. Insights that impact.
Decking and railing that's ready for anything you throw at it. Even John's 40th. Trex. Performance engineered for your life outdoors.
At West Shore Home, we're making it easy to completely refresh your bathroom with our Buy One, Get One sales event. Buy a full bathroom remodel and get a tub-to-shower conversion in another bathroom for free. You heard that right. Get a fresh, modern upgrade to your main bathroom and eliminate that outdated, hard-to-clean tile or old fiberglass unit for free. For more information, visit westshorebath.com or call 888-4-WEST-SHORE to lock in the savings. That's westshorebath.com for Buy One, Get One savings from West Shore Home.
Today, let's paint with Behr, America's most trusted paint brand.
Wait, we don't have Behr.
Do we need that?
Well, this year's a paint and primer.
It just says ain't.
You bought ain't.
Well, with Behr, you can paint a whole room for under $100. How much did you spend?
Like a lot more.
Oh.
I thought you said you researched this.
Aren't all paints the same?
No, they're not. Don't overpay for your next project. Get Behr quality at an everyday low price. Only at the Home Depot.
Mortgage rates slipped to the lowest level of 2025 this week. Many Americans, though, still feel priced out of home ownership. Joining us now, housing analyst Ivy Zellman. Zellman, Executive Vice President, been doing this a long time, Ivy. How long at your own company? I remember you were toiling with some of the big Wall Street firms for a while, and then set out on your own, right? What year was that?
Well, good morning, Joe. Thanks for having me. We started Zelman in October of '07.
Of '07. That goes back a ways. You have to go back not quite as far to have half of what we are right now for mortgage rates. This is not, 658 is still, whatever we are, the lowest of the year. Does this solve anything? Wasn't it in 2022, it was 3% or something, wasn't it?
Well, if you look at affordability relative to history, today affordability is the most stretched that we've seen since the early 80s when mortgage rates were in the double digits. So it's definitely very challenged for first-time buyers, and we're seeing that with the market really pressured today.
Yeah, I mean, we got Berkshire and the nice move in some of the home builders. Has supply changed at all? You're talking from the demand side. Supply hasn't been great either. Is that easing up yet at all?
Well, we just published our July home building survey, and we saw a 7% pullback in starts. But starts relative to orders historically have been kind of on par, 1-to-1. And right now they're about 5% above where they would be historically. So I think we've seen some improvement, but spec levels are still very elevated. And according to our survey, the spec levels are on a scale of 0 to 10 at a 6 are the highest they've been in several years. So we do have inventory that needs to be worked through before we see some relief on pricing pressure.
You know, we're all watching the Fed. We have Austin Goolsbee on a little bit later. Maybe we do eventually, who knows, see some cuts. Does that mean we get out of this relatively high range? I still think people are forecasting 6.5 to 7 for the next, I don't know for how long, for mortgage rates. Do you foresee that? Do you see going below 6 within the next 18 months?
Well, I don't forecast rates, but, you know, given the long end of the curve is really dictate where mortgage rates are priced, you know, I think the higher for longer is really predicated around risk of tariff inflation and deficit. So that's beyond my pay grade, Joe.
Right.
I do want to point out that mortgage rates for the new home market are already well below that. Builders are offering buy downs as low as 3.99 for 30 years, and that really offsets the affordability challenges. But even with rate buy downs, consumers are still having difficulty qualifying. And now we have the whole student loan headwind that right now builders are saying modestly through our survey are impacting them. Was a 7%. We're saying it's impacting. Then in July it was 10%. So we're seeing some headwinds that remain even with rates well below where they are for prevailing rates today.
For existing homes, is the fever finally breaking, like in some of the real hot areas down south? And there have been declines, or is it just you have to pick a spot and just decide it's not everywhere?
I think there is a correlation to the weaker markets generally in the Southeast. The COVID winners tend to be now the markets that are most pressured. Probably the Southwest Florida market, Fort Myers, Naples, looking out west or southwest in Texas, Austin, Dallas, those markets are very challenged, and not coincidental. The builders are the most prevalent there, along with second homeowners and investors. So we're seeing people that are taking chips off the table and recognizing that affordability, even if you're a homeowner, tends to be much more challenged when home insurance rates are skyrocketing. We've got certainly property taxes rising. So it's pretty tough out there to have any discretionary dollars left over after all of your non-discretionary expenses.
I mean, not everything is California, but we've seen just some horror stories about trying to rebuild in the Palisades and permitting. And, you know, you just mentioned regulatory issues. It's obviously based on states or more local. But does that add into the issue with trying to loosen things up? Are young people ever going to be able to buy a home, Ivy?
Well, I think it starts with also land prices, and right now builders are renegotiating in some cases with their land bankers, land developers on their option contracts, and that's definitely going to help their ability to price homes more affordable, or price homes to make them more affordable. But I do think that the regulatory pressures add to the cost of housing significantly through impact fees and other costs that builders have to absorb. And so I do think that that's a definite headwind to really providing affordable housing in this country. And there's many that talk about, well, we'll just build more rental housing. And I don't know necessarily that that's really going to solve the inequality gap, though, unfortunately.
Can you tell me which home builders I should buy? Do you do that? Or is it like more, you won't tell me that, or mortgage rate projections? Do you have some favorites?
On the home builders, that's where we analyze, so we can give you some.
Give them to me.
Yes. So we want to point out, too, that one of the things that's interesting for the group, even with the rally, they were now trading at 1.8 times book, 14 times forward earnings, which is the highest multiple that we've seen in a very long time. So I think that they're really reflecting the expectation that the pickup in July that we've seen in volume, we saw a 2% sequential increase in July. Typically, July is down 6%. And we saw for the first time in 6 months, we saw orders improving, and year over year, they were up 3%. So that is giving the optimism to give people more expectations that home builders are now turning the corner. And then, of course, the expectation is the Fed's going to solve everything, which we're not really in that camp because we think the long end will stay stubbornly high. But with that said, the small cap home builders are trading at a 47% discount to the large cap builders. Historically, that discount has been about 25%. So we like some small cap names like Meritage as well as Taylor Morrison. And we just upgraded Schottenstein MHO, given the depressed valuation and its very strong returns, our outlook for strong returns continuing.
All right. So I'm not going to ask you when I should refinance, or should I do a 30-year or a floating, or I won't ask you any of those things. But thanks for the picks, the stocks. I don't have a 30-year. I think that's am I wrong to not have a 30-year?
Well, I think it depends on your horizon, how long you expect to be in the house. But today, consumers, again, if you're buying a new home, you can get a really good deal, Joe. So maybe you should go look for a brand home.
No, I'm worried about what the next home I move into is. Ivy, it's not no, that's a ways off. Thank you, Ivy. Good to have you. All right.
Good.
Coming up.
Why are you laughing? You gotta laugh at yourself. Do you not?
What kind of home we're talking about?
Yeah, you know what I'm talking about.
I know exactly what kind of home you're talking about.
That's so far. It's 40 years. 40 minimum.
Minimum?
Yeah, because this is going to be my home with you for the
40 more years?
40.
And then is someone going to feed us at the next home? I need that.
Something to be said for that.
Coming up, $400 million worth of classic cars. They're going to roll across the auction block in Monterey and Pebble Beach this weekend. The one and only Robert Frank. He's got a hard job, kicking the tires on some of the priciest cars on the market next. And then retail sales data along with import prices set to be released at 8:30. The numbers, market reaction. We've got stocks and some automobiles to take a look at after this.
An important day is coming for every American with money in the markets, and it'll be here sooner than you think. I predict this stock bull market will end with an epic crash. I believe another epic stock crash is coming for the markets, based on 100 years of data. My name is Mark Chaikin. I spent 50 years on Wall Street, where I helped create an entire stock rating system. I've met everyone from George Soros to Warren Buffett. I got my broker's license in 1966 and have invested through 9 recessions plus countless panics and bull markets. And I found there's one incredible indicator to help identify big market turns. I used this indicator in 2018 when I told Jim Cramer stocks would fall. I used it in 2020 to help folks get back into stocks. I used this indicator again in 2021 to beg folks not to sell when so many were panicking, and again in March of 2022 to predict a crash. I used the same indicator to predict a new bull market in January of 2023, and again in 2024 when I told Business Insider the bull market would continue. And now I'm using the exact same indicator yet again to detail why there's a 90% chance the market will end the year up in 2025, backed by historical data, before crashing in 2026. Look, if you have money in the markets, you must know 2 critical things right now. First, what to own in 2025 as the market continues higher. And second, exactly when the markets are likely to crash in 2026. I put together a free presentation that explains everything, including the exact month stocks are most likely to crash next year. You can watch my new presentation free of charge. To learn more, visit the website below.
Investing. You buy low, sell high, jump on that trend, ride the wave. Stop. That's not how investing works. You're not a child playing a game. This is grown-up business. The real thing. You know wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
CNBC. Live ambitiously.
My name is Josh Brown. I'm a financial advisor, I'm a wealth manager, and I'm a dad. Everyone needs to invest. Best Stocks in the Market is going to be fun for pro subscribers. We're going to take you behind the scenes and tell you the stories that are driving some of the most exciting names on your quote screen. We're going to show you exactly where the best stocks are and what's happening with them in real time.
Join Pro for exclusive access to Josh Brown's Best Stocks in the Market at cnbc.com/beststocks.
Watch that animation. Wow, Robert, that's pretty cool animation. Up to $400 million worth of classic cars are going to roll across the auction block in Monterey and Pebble Beach. CNBC's dashing wealth reporter. Did you go into the production of that, Robert Frank? Did you see how cool you look on that? Join us now with some expectations.
I do get to go to some great-looking places, Joe, and we are here in Monterey for the biggest gathering of the year. As Andrew mentioned, some of the most beautiful cars in the world, the most expensive cars in the world, all gathering here this week. In fact, more than $400 million worth of cars, about 1,000 of these vintage classic cars rolling across the auction block this week. And this is the biggest test of the year for a market in classic cars that has really been in decline for the last 3 years. Sales here expected to be down again this year. You talk to collectors, they blame higher interest rates. They say all this global uncertainty is affecting it as well. But the big change right now in classic cars, the big driver and why things are down a bit, is because of this new generation of collectors. So millennials and Gen Z, they want cars from the 1980s, 90s, even 2000s, and that has left an oversupply of cars from the 1950s and 60s that were all loved and collected by the baby boomers.
The newer generations coming in, literally Gen Xers and millennials, they're driving the market today. They're the ones buying cars, and they're just interested in a different starting point. They don't come in here and say, well, I need to go make sure I cover all the older decades of cars before I collect the ones I really want. They're starting right off with the cars that they have the greatest preference for.
But guys, the top lot of the week, the star of the week, is still one of these older cars. It's a 1961 Ferrari California Spider hardtop alloy body. Only 8 of these were made. The estimate on this is over $20 million being sold at Gooding & Company. And then Larry Ellison's car, it's a McLaren F1 that he actually bought new back in 1997. He probably paid around $1 million, later sold it, but his car is coming to auction under sealed bids. The starting bid for Larry Ellison's used Formula One or F1 car from McLaren, starting bid of $23 million over at RM Sotheby's, guys.
Wow. I hadn't thought of that. That's interesting, Robert, but I hadn't thought that the new people in the market aren't looking for what we think of as classic cars. They're looking at things we think of we used to drive. We used to, some of those I feel like I didn't sell that long ago from the 90s and 2000.
Joe, they say that you collect what you loved as a teenager. They say that whatever you loved as a teenager, whatever cars, whatever music, is the kind of thing that you love later on in life. So you think about millennial Gen Z, what they loved as teenagers were cars in the 80s, 90s, and even 2000s. This car, though, this is a 1951 Ferrari Barchetta. They only made 28 of these at Ferrari, estimated at $4 million. So these older cars are still worth and getting sold for a lot of money, but the prices are down, some cases, 20 or 30% from what this car would have been worth, say, 5 or even 10 years ago.
And not because of the economy or anything like that. What about the economy? Can you glean anything from that, what's happening out there? Or is it inelastic for these things?
No, it's not inelastic. It is sensitive to what's happening in financial markets, the economy. Most of the collectors that are here in Pebble Beach, they own their own companies, so they're sensitive to tariffs. They're sensitive to what's happening in the broader economy. There was a stall in the market in sort of April or March when there was all that tariff turmoil. Now they're saying with the markets back with a little more sort of at least comfort with what tariff policy is, they're saying the collectors, especially the business owners, are feeling a bit more confident. But we're going to have to see, you know, the sales really start today, and we're going to have to see today and tomorrow what those sales and what that confidence level really looks like.
Okay, Robert. All right, have fun. Great weekend. See you later. Thanks.
Okay. Coming up next, retail sales and import prices, the numbers and market reaction. You don't want to go anywhere. The stock market could move on this very number right after this.
Inside Wealth is sponsored by PGIM, a leading global asset manager across public and private markets.
At PGIM, our ETFs use today's best ideas to help bring tomorrow's goals within reach. Our broad suite of over 50 low-cost ETFs is backed by 150 years of active management expertise. Explore PGIM ETFs today.
Nuveen invests with the foresight and vision to anticipate the needs of future generations, to build strong portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen, invest like the future is watching.
I'ma kick back when you fake like that. Would you let me go? No, you never come back.
The unmistakable, unmatchable 2026 Infiniti QX60.
What does a good investment opportunity look like? At T. Rowe Price, we let curiosity light the way, asking smart questions about opportunities like AI and how the industry's born to support AI might better support us all. Better questions, better outcomes.
Flavors. There's an H-E-B Creamy Creations flavor for every craving in Texas. Just one more reason. Here, everything's better.
Today, let's paint with Behr, America's most trusted paint brand.
Wait, we don't have Behr.
Do we need that?
Well, is yours a paint and primer?
It just says ain't.
You bought 8.
Well, with Behr, you can paint a whole room for under $100. How much did you spend?
Like a lot more.
Oh.
I thought you said you researched this.
Aren't all paints the same?
No, they're not. Don't overpay for your next project. Get Behr quality at an everyday low price. Only at the Home Depot.
2 seconds away now from retail sales, usually important, but imports. Steve's very excited. There's the futures. They're up solidly. Treasuries moved, backed up a little bit yesterday after the PPI. Rick Santelli standing by at the CME in Chicago. Could anything change? Could we have a whole new view on everything based on imports today, Rick? Probably not, right?
No, you know, it's hard to tell. These numbers the last couple of days, the most interesting feature about them, CPI and PPI, is the market response. We could spend a lot of time digging into data and looking at how strange some of it is, but the market divined it real well. Here we go. It's hitting the wires. Retail sales, this is for the month of July. It's the advance. It's going to change in a couple weeks. Headline number expected up 0.6, comes in darn close, up 0.5%. Up 0.5% compares pretty good with the up 0.6 in the rearview mirror, which hasn't been revised yet. And the up 0.6 was the second best number of the year. 1.5 is a high water mark in March of this year. If we strip out autos, it actually still retains a good chunk of that growth. Up 0.3, and that's exactly as expected. It follows up 0.5. Don't see revisions yet. X autos and gas, it holds up okay. It's losing a little bit of steam, up 0.2. Now, 0.2 X autos and gas, that would be the lightest since it was unchanged in May, so not bad numbers. Revisions starting to come in. I'll get to those momentarily. The core retail sales, or control group, coming in at nice 0.5%, better than expected. 0.5% is what the rearview mirror was, but we'll get to revisions in a second. Here we go on the revisions. So the numbers are pretty good with respect to the advanced July. Look at the rearview mirror. Headline now moves from 0.6 to 0.9. X autos from 0.5% to up 0.8. X autos and gas from up 0.6 to up 0.8. And that control number moves all the way up to 0.8 from up 0.5%. These are solid growth numbers. Now, let's go to import prices, shall we? Import prices, these are all July. If we look at the headline number, up 0.4. Okay, Joe, that's definitely warmer than expected. Up 0.4. Well, that would be the high water mark of the year. That would be the high water mark going all the way back to tax time of 2024. April of 2024. So we see import prices under a bit of pressure. If we strip out petroleum, they're still on the high side, up 0.3. Up 0.3 equals the high water mark of the year in April, and you're going back to April of last year to find a higher level at up 0.6. Now, if we take a year-over-year perspective, those were month-over-month. Year-over-year perspective on import prices, down 0.2, down 0.2, which means 1, 2, 3. This is the third down 0.2 in a row. Okay, switch gears to export prices. Export prices up 0.1 on a month-over-month headline. On a year-over-year, they are up 2.2 year-over-year, up 2.2. Where does that comp? Well, May was 1.9. Last month was 2.6. Fits right in there. We are seeing some revisions on some of these import-export prices. They're going negative. So we see minus 0.1 now on import price month over month. That was originally up 0.1. We have one category left, folks. Empire Manufacturing comes in powerful. 11.9, we're expecting unchanged. 11.9 would be the second highest of the year outside of March when it was 20. The market divines all this better than any single human can. Interest rates have moved up a bit. We were at 4.29 and a 10. Now we're at 4.30. How does 4.30 compare? 4.30's up 2 on the session. It's up 3 on the week. And we want to pay very close attention to what's going on in the pre-opening equities. They haven't been phased much. Still a powerful opening expected in the Dow Jones Industrial Average. Joe and the gang, back to you.
All right. Very good, Rick. Seemed a little continued upward movement in the 10-year. Steve Leisman joins us now with more. Did
Rick take a breath when he did that?
No, he doesn't do that. Did this live up to your expectation?
I'm excited by this. I think the retail numbers are good. That's the most important thing to me, but I don't know how much of this is going to be inflation, how much you have sort of tariff inflation in here. What is interesting is to see that this number may be help GDP forecast. We came in with the Atlanta Fed tracking at 2.5, CNBC Fed survey at 1.25. That's the forecast versus the tracking. Bit of a boost in gasoline station sales. And the key about this big question, who's paying the tariffs? If import prices are up, it means that they're not paying it overseas. And I would look at one particular category. I just want to find it again. Finished goods. Prices for major finished good import categories were mostly up in July. Import prices for consumer goods increased 0.4% in July. So at least in the data, we cannot find the idea that foreign exporters are absorbing this price, at least not now. And maybe actually they have somehow used this opportunity to increase prices a little more. Forget my analysis. Let's get some real expert analysis. Joining us now, Chicago Fed President Austin Goolsbee. Austin, thanks for joining us this morning. We have
good morning, Steve. How are you?
We've now had 3 of the 4 inflation reports we get in this nation. The most important come in the end of this month, PCE, but we can kind of calculate that. Take a step back. We know you don't react to any single inflation report or any single report. Give us your picture right now or your sense right now, Austin, of the inflation story in this country right now.
Well, it's been a little mixed. It feels like the first 2 of the 4 came in quite mild, and we were feeling good. And I was saying here and elsewhere, if we get several reports like that, I'm going to feel comfortable that we're still on the golden path and things be okay for rates to come down. We put in a note of unease, I'd say, in the last CPI and now PPI, with the inflation kicking up in categories that are not obviously going to be transitory, which is to say the services inflation look to be turning up. So I feel like we still need another one at least to figure out if we're still on the golden path.
Were you looking, as I was this morning, into those import prices to see if they were the exporters were absorbing some of this, and now you don't see it? What is your sense of this number this morning? Usually, I don't know, in 23 years of doing this on TV, I've maybe talked about import prices 1 or 2 times before, but now it's kind of important, right?
Yeah, look, we're out sniffing in all sorts of places that are not normal to have to sniff. The thing about import prices to remember is they don't include the tariffs. In most of those cases, the tariffs will be on top of it. So if the foreign is absorbing, if the foreign exporters to the United States are absorbing the cost, those prices should be going down. If those prices go up and then you add the tariffs on top of it, that's a little bit the scenario, that's the unease scenario where, the costs are going up and now we're in the business of trying to figure out, well, how long are those price increases going to last? Let's not overreact to 1 month of import price data, for sure. Let's not overreact to 1 month of CPI or PPI inflation, but it's at least an area of concern.
Austin, when it's come to rates, you've been maybe, what do they say? St. Augustine said, "Oh, Lord, let me be chaste, but not today." Your attitude has been...
I thought you were going to say brilliant and prudent, Steve.
Brilliant and prudent, yes, sir.
What is this?
Yes, sir, and chaste. But the thing is that you've talked about rates will come down over time, but you've been a little bit circumspect about the time over which they should come down. Could you give us your sense of that right now?
Well, I was pretty specific of the time frame in the run-up to April 2nd, and that I thought over the year they could come down a lot because we were at pretty much full employment and inflation was headed to 2%, and that's the thing that the FOMC by law is supposed to be looking at. What's happened is we've added a lot of uncertainty and we've added a lot of dirt in the air, which much of it has come from tariffs. And the tariffs, the theory that tariffs are a one-time price increase, that's true for one and done tariffs. And these haven't been one or done. And so we're trying to grapple with this idea of, is this going to be a persistent inflation shock? Is this going to be stagflationary in direction, which is to say it's going to be driving down employment at the same time as driving up prices? That's the worst thing the central bank has to think through because there's not an obvious playbook. You got to sort of weigh off which of these is a bigger miss and how long is the bigger miss going to last. So you can't answer the question, when will we know that we're back or still on the path that we were on before April 2nd, without answering the question, is this going to be the end of the stagflationary shocks, or are we going to keep getting new policy administrations?
So when you say that and you talk about this, it sounds like you need some time at the least. And if you could, when you respond to that, also answer this question. How much does the Fed's stance about policy play a role in figuring out whether or not tariffs become a wider spread problem?
Okay, you know the rules. I'm not allowed to speak for the Fed or anybody else on the command. I'm going to just talk about how I think about that. I think partly the conventional wisdom for how should a central bank respond to a stagflationary shock, which I think of tariffs as having a heavy stagflationary component. The primary effect, the Fed can't pump oil, the Fed can't adjust the supply side, but it can try to prevent the secondary impacts, which could be wage price spirals, or if you start thinking about the secondary impacts of tariffs on parts, components, supplies, and intermediate goods, now it's a little more complicated than the Econ 101 version, because now the tariff isn't just staying in its lane, it's going to be raising the cost of production for domestic manufacturing and others. And that's a lot of times, certainly during COVID and post-COVID, took time to wind its way through the economy. So I do think we're going to be in the business of trying to figure out which part of these price increases are we ignoring because we think they're transitory, and which ones are we responding to. Now, that doesn't mean that we have to hold forever or for as long as it takes for the prices to come back down. It all depends on the data and what's the economic outlook. If we keep getting inflation reports like the ones we had, the first two of these four that you mentioned, I would be very comfortable that, hey, the dust is out of the air. It looks like we're still where we were, which is a strong economy with inflation coming back down. In that circumstance, I think it's totally fine. It's expected. It's the right thing to do to bring the rates down to where we think they're going to settle. You know, we got to get some clarity from the numbers.
One thing we all hope for, no matter who we are, is that real wages go up, or weekly real wages keep going up. I mean, what else? Why else are we doing anything in this country, Austin? And, right? And it's been pointed out, you know, the Biden administration had a problem for the first couple, 2 or 3 years because of the inflation rate, and that was constantly harped on by critics that real wages, weekly wages, haven't grown. Now they're kind of stagnant again. And what you just described, I would imagine if the labor market weakens, you're not going to see people asking for more money, and if inflation comes back, then we could be stuck in the muck again, and that spells doom for current administrations when people feel like they have less buying power than when they started.
There's two parts to that. The political part, when I joined the sworn member of Federal Reserve, I'm out of that part of the business. But you're an expert on it, Joe. I don't know what it means doom. I do know that's a mess. That's the mess of something moving in a stagflationary direction. Is no one's happy, and they shouldn't be happy. Prices going up, wages going up less than prices.
Connection
lost. Incomes
lost.
falling, but not getting any relief on the inflation side. That's what we want to avoid. We're going to have to see where we are. I still think underneath all of this, we were in a strong position on the economy going into April, and there are still a lot of strengths in the economy. So if we can assure ourselves or get a hint that for this meeting or the meetings this fall that we aren't on an inflationary spiral that looks to be persistent, I still think it makes sense, given the strength of the economy, to move rates more back to where we think they're going to settle.
Austin, I want to be clear about what you were saying. I want to make sure you finished the thought. You said if we get inflation reports like we got earlier, and by earlier, I think you meant before the ones this week, then you'd be fine to let through. But the ones this week, I just want to be clear, are they giving you pause about reducing rates?
They're in the space. You know, I don't like tying my hands before a meeting, especially at the hardest thing the central bank has to do, as I always say, is get the timing right at moments of transition. So I want to get all the data we can, and I want to hear from my colleagues. It seems like people have some different views about what's happening. But the fact that services inflation for the single month was coming in at a rate we haven't seen in a long time, very high services inflation in that new data. That makes me a little uneasy because that's very unlikely to be caused by tariffs. So I'm hoping that was a blip. If that wasn't a blip, then that's an area of concern, and we're gonna have to grapple with that.
Austin, I want to have a conversation, a quick conversation, like we used to have when you were just a professor and we'd meet at the American Economic Association annual conference.
That's
because
right.
one thing we don't talk about is what's happening on the employment side of the mandate. And you've started to talk about this, and some of your colleagues have as well, which is where's the break even anymore? Given what's happening in immigration and with deportations and what's happening with the labor force, we used to say, oh, 100,000 is break even for the unemployment rate.
Right.
But now, if we did 50, would that cause you alarm as a Fed president that the employment market is weakening? Or do we need to move, I guess my question is, from thinking about the levels of employment to thinking about ratios of employment because of all the changes happening on the labor force side?
Look, I think a little bit, yes. You know, as I say, I just try to be a data dog, and one of the main rules of the data dogs is don't be too choosy about what you sniff. You know, whatever hits the floor. And we had a moment, we've had long moments where the headline jobs created number is the tentpole number that everybody wants to look at as an indicator of where we are in the business cycle. We saw in 23 and 24, when you have uncertainties about population growth, especially coming from immigration, but where you have those kind of uncertainties, you can get way off from where you think the break even is. And we had that in 24. We're coming in 150, 170, 190,000 a month. And we thought the break even was 85,000 at Chicago Fed. But that wasn't a sign that the economy was overheating. It was a sign that we were getting the population growth rate wrong. If we're in that environment now and immigration is going down, let's just be careful about over-indexing on that monthly payroll. And my intuition is exactly what you said. Those ratios and rates were a little bit better indicator of business cycle. So the hiring rate, the layoff rate, the job openings rate, and the unemployment rate. Those are kind of the four horsemen of justice in this thing.
And harkening back to something we talked about earlier on the show, Austin, could you ever foresee a Fed chairman with hair like Axl Rose, with like a David Zervos type ponytail? Is that in the realm of possibility? Is that in the realm of possibility? And not just because you'd be.
Wait, you think they need to be bald? What is your position?
I like bald as opposed to
bald.
Yeah.
I had a minute left for a question.
I'm not an anti-baldite.
I heard that there used to be in the Fed building. There used to be a barber. Yeah.
No, if he cuts it now, then he really wants it, right, Zervos? If he suddenly
comes on.
Yeah, if he suddenly comes on and he's high and tight, you know, like
shave the beard too.
Austin, thank you very much. Appreciate it.
Yeah, great to see you guys.
Please come again. It's a pleasure and a privilege to have you come on from time to time.
Thank you, Mr. President.
Walk us through these difficult times.
Thank you, Mr. President. Happy birthday, Mr. President. No, it's not.
Thank you, Austin. When we return, a closer look at Intel. We're going to continue the debate we've been having all morning about the government potentially taking a stake in that company. As we head to a break, a look at what's leading the Dow higher in the pre-market. United Health adding about 175 points to the futures. We're coming right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Sponsored jobs on Indeed are 2.5 times faster to first hire. Visit Indeed.com/hire.
You did it. You took an idea on a napkin, built a successful business, and made it look easy. But at U.S. Bank, we remember what went into getting here. The hard work, self-doubt, tough decisions. From all those extra hours to finally enjoying the rewards. Our wealth management team is always here to work with you and every generation to come, because there's nothing as powerful has the power of us.
Rather than get rich quick, I believe in get rich slow. The high yield cash account at Public actually had higher rates than anything else I was able to find online. I don't want to be losing sleep over having made risky investments. I needed something stable that could really give me long-term financial benefits. I know my money's working hard for me, and I know I can access it anytime I need it.
When cyber threats target the world's data, seconds matter. That's why the world's most trusted brands depend on ReliaQuest Gray Matter to contain threats in seconds. It's the only technology-independent, AI-driven platform built by security operators for security operators. ReliaQuest. Make security possible.
Barry Diller's memoir is out today.
They look at me like, I now know you.
You're not talking about massive loss of jobs. This is a labor market where hiring is hesitant.
We have concerns with lots of American companies that come on Squawk Box that do business with China.
You should be concerned with the companies that don't come on Squawk Box.
Squawk Box, weekdays 6 a.m. Eastern and streaming on CNBC+.
Shares of Intel moving higher on a report that the Trump administration's in talks to take a stake in the chip maker. Joining us right now to try to make some sense of this is Gil Luria, is the head of technology research at D.A. Davidson. How do you feel about this, sir?
It's essential. Let's not forget what Sam Altman and Mark Zuckerberg are talking about when they talk about superintelligence is the next wave of nuclear proliferation. This is something we cannot afford to lose. And we already have the best models here, right? We have OpenAI, Anthropic, Google. They have the best models. We have the best chip design in the US with NVIDIA. But the ability to make chips, we're currently relying on a Korean company and a Taiwanese company. That's untenable. In the nuclear equivalency here, we're talking about the shell casings. We can't rely on somebody else making shell casings for our nuclear arsenal. We have to get it right. Intel has had many opportunities over decades to get it right, and it hasn't. So we need to intervene. The government's going to come in, and it's going to give Intel unfair advantages. And if it's going to do that, it wants a piece of the business. We're all capitalists. We don't want government to intervene and own private enterprise. But this is national security, and had Intel gotten this right, like OpenAI and NVIDIA have, we wouldn't be in this situation. But Intel continues to falter with all the support that it's gotten, so there needs to be more intervention. That's what's happening.
Amen, Gil. Amen, Gil.
Okay.
Thank you.
Okay, so here's my question.
We can just end the interview and the show.
By the way, I'm fine with it, but I'm fine with it under this question. What do you do about all the other shareholders that you're bailing out? How do you feel about that?
We've done this in the past, right? We did this after the financial crisis. We had to manage keeping banks afloat, the too big to fail banks afloat. The government took a piece of the business and then tried to help the rest of the shareholders. And where it did, those shareholders benefited right alongside the government. We took a piece of that business, and we're going to do that now. And we actually have a vehicle to do that with our emerging sovereign wealth fund. We also invested in MP Materials. Same reason. Strategic resource for making sure that we win. This is, again, I mentioned what Mark Zuckerberg and Sam Altman are talking about. I'm not sure everybody's on the same page as they are, but they have very high conviction that these tools are not only going to get incredibly capable, they're going to get there very fast. We don't have time to consider other Intel shareholders as the primary concern here right now. The primary concern is national security, and that's what we're seeing.
Do you think there's a construct in which you could, I want to say, penalize Intel shareholders but not benefit them?
That could happen. Obviously, we're going to dilute them in the short term. But longer term, again, with government intervention, they're not just going to get the government owning a piece, they're going to get an unfair advantage. The government is going to protect Intel vis-a-vis Samsung and TSMC going forward. It's going to advantage them. It's going to subsidize them. So there's more upside than downside to Intel shareholders. That's why the stock was up last night, and that's why it's going to be up today, is because they will get that unfair advantage. Shell casings for nuclear weapons. This isn't something we can mess around with.
Gil, fascinating perspective. Thanks for weighing in on the debate. You came in on Joe's side. That's good.
On the real? No, on the... Came in with facts, and you always call them empirical things. You always say it's empirical whenever you want to just...
We'll see. Squawk Box coming right back.
At Morgan Stanley, old school hard work meets bold new thinking to help you see untapped possibilities and relentlessly work with you to make them real.
How will you shape the future of industrial manufacturing with confidence? How will you optimize your supply chain and keep pace with data-driven manufacturing?
Winners in the market are using data and digital technologies, carving out greater value within the overall value chains.
EY teams are rooted in places where products are made, bringing insights from professionals who understand industrials, the sectors they supply, and trends driving the industry forward. EY, shape the future with confidence.
At AT&T Business, we confidently guarantee our network. What we can't guarantee, enough hours in the workday. Or your projects always going as planned.
3 days, max.
Oof, more like 3 weeks.
Hey.
And closing up shop on time?
Still open? Sure. Yes. They're open.
Not tonight. But with AT&T Business, you can get the connectivity you depend on, or we'll make it right.
Introducing CNBC Plus, the new streaming platform from the +1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus now.
80% of the vehicles we sell in America are assembled in America.
What would happen if other car companies did the same?
If they were like us, you'd have up to 15 new plants.
Assembling nearly 4 million vehicles per year.
If they were like us, they would have said no to the taxpayer bailout and added thousands of American jobs. Nobody's committed to America like Ford is.
And who benefits from that? You do.
You can get this fixed now and pay later. You can get this fixed now and pay later. And this. Get it fixed now and pay later in 4 interest-free payments at safelight.com.
Safelight Repair, Safelight Replace.
Showtime! Save big this summer with the bundle that has something for everyone.
Here we go, boys.
The Disney Plus, Hulu, and ESPN Plus bundle.
Isn't this awesome?
Get it all for less with plans starting at just $16.99.
Final check on the markets. You see the Dow up right about where it was. So the numbers came, the numbers went. That's United Healthcare. And
there it is.
In large part due to United Healthcare. We'll just summarize again. Yesterday, after all was said and done with the hot PPI, the S&P actually closed at a new high. It's indicated if it were to hold on to these gains, be another new high. NASDAQ a little bit weaker. NASDAQ actually did not, I don't think it was down a couple of points yesterday. But after all was said and done on a wild week, not much has changed, even though we had a lot of numbers and we had a lot of fun and a lot of fun and a lot of agreement.
By the way, a lot of people couldn't see what you were doing during the commercial. We're going to get you and Matt Friend to do some presidential impersonations. Maybe we'll do that next week.
Checkers.
Have a great weekend, everybody. Squawk on the...
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Scott Wapner and Mike Santoli at Post 9 of the New York Stock Exchange. Kramer in favor of the morning off. Pre-market indices are going in different directions as UNH is going to boost the Dow on the heels of Buffett's purchase, but AMAT's going to hurt the NASDAQ and the semis as it guides lower and suffers some downgrades. Retail sales were solid, good revisions. Our roadmap begins with this new bet by Buffett, Berkshire revealing a stake in UNH. The Dow component is surging on that news.
Chips also in the spotlight this morning. Intel rising on reports the Trump administration discussing having the government take a stake in that company. But Applied Materials this morning is taking a hit on weaker than expected guidance. Plus, President Trump on his way now to Alaska for that high-stakes meeting with Russian President Putin about ending the war in Ukraine.
Let's begin, though, with the markets. Plenty to get to regarding single stocks, UNH and AMAT, as we mentioned. But briefly, the macro data today. Mike, we mentioned retail sales, 0.5, looking for 6, but still pretty good. The control group was good. Import prices, though, kind of throw some cold water on the notion that exporters of other countries are eating some of these tariffs.
For sure. I mean, the retail sales, with a slight upward revision to June, looks like pretty solid in general at the core level. And so the premise that the economy is in decent shape, maybe decelerated a little bit, but not that much. Now, the import price thing, it just, this week has shown you how high the bar is for the market to get rattled by the inflation figures, given the extremity of the shock of the payroll report that we got. So it just feels as if the market's not going to be pulled off of this idea that September there's going to be room for at least a 25 basis point rate cut. And the market wants the cut, but it doesn't want to need the cut. And that's why, I mean, it's like
all of the gain, none of the pain.
Order. And who knows if that's going to stay in place? Who knows if the Fed wants to change the narrative a little bit next week? Because there is room for that. But for now, the bond market is positioned in such a way that you're probably going to get it. And it's going to be a good news cut and not a rescue.
After all the data that we got this week, CPI, PPI, import prices, if nothing else, you're going to leave this week with more concerns and or questions about inflation from here than you came into this week with. I think Austin Goolsbee this morning on Squawk is very representative of that perspective. He talked about unease, the word that he used, given all the data out there. He mentioned stagflation, which has been one of the words of the moment as well, and whether this inflation is going to be persistent, which sort of begs you to believe that in his mind, you got to wait and find out the answer to that question.
I mean, clearly the Fed does not want to be pulled like well over a month before the September meeting into a place where the market is just going to force it. And it's not going to be able to pull the market back from that. Morgan Stanley economists this morning are essentially saying Jackson Hole next week leaves the opportunity, maybe the last opportunity, for Jay Powell to preserve the optionality.
They say he's going to be hawkish.
Yeah, exactly. They say, look, we still are in wait-and-see mode. And waiting and seeing means taking all these inflation numbers we've gotten and the ones we're still going to get before the September meeting to figure out what the path looks like. And I don't think you're going to get resolution on that. It's really going to be more of a weight of the evidence thing. And again, if you get a strong jobs number for August, then it probably does foul the equation. I just don't know if the market really would panic out of that. It's just kind of interesting.
There's a great Smith song called These Things Take Time, and they do. We heard it from Goolsbee. We heard it from Musalem yesterday. And you're right, Morgan Stanley today, whose view has been this is going to be brief, and then we're going to get back to business in terms of tariff-related inflation. But today, July data suggests the main risk to our view is a more elongated pass-through. The peak in inflation could be lower and come later, possibly extending above target inflation further into 26. So this notion that we're going to be living with it may be longer than we thought.
I'm not going to break any news here by saying that if Powell is in fact hawkish in Jackson Hole, the market's not going to like that at all. And given everything that's happened this week, we're still pacing for a good week. I mean, if you're going to be up more than 1% on everything, the Russell's going to be up, all things being equal, of course, up more than 3.5%. But if he goes there and he does maybe not 8 minutes of pain like Powell did before they started hiking rates, if he leaves there with the notion that it's 25 or potentially even nothing, I don't think the market's going to take that well at all.
The market won't take it well. I don't know that he's necessarily going to be dismissive of the possibility for a September cut, because it feels as if there has been a net dovish move in the rhetoric, not decisively. Also, Morgan Stanley's, I think, in the no cuts in 2025 from here on out camp, as is Bank of America. So you have these kind of factions on the street that are defending this idea that we may not get there, you might not have the ingredients for. I think the way the market sees it, it nets out to 5-ish% nominal GDP pace. We can live with that. That's, I think, almost the way we, you know, and the pain is isolated and meted out in spots. FedEx? Oh, yeah, don't tell me that there's no tariff effect. Look at FedEx stock, right?
Mentioned by Apollo today.
That's right, Torsten Slope talking about
for example. You know, like all these domestic users of steel that are getting hit on stuff. And so I do think that there's a way that the market is almost kind of, you know, leaning on the bright side at how this all washes out. $20 to $30 billion in tariff revenue a month. You know, you're talking about 700+ billion in retail sales, right? I mean, it can sort of bleed through without it being like very conspicuous. But it's really how tolerant we're going to be for this headline bump in inflation.
The big single stock story of the morning is clearly United Health, because the market wouldn't look pre-market like it does without that move today, getting a much-needed boost in the pre-market, on pace for the best day in 5 years, courtesy of Warren Buffett. In a regulatory filing, Berkshire Hathaway disclosing it's bought 5 million shares in that company as of June 30th. Total value, $1.6 billion. So maybe it's gotten so bad from the stock standpoint that it finally looks so good to somebody like Warren Buffett, maybe somebody like David Tepper at Appaloosa, maybe somebody like Dr. Michael Burry. Now, these are, you know, in some cases backward looking. You don't exactly know from the most nimble of traders out there what they're exactly doing. However, it's an extraordinary move this morning for this stock as a result of Buffett and Berkshire.
Yeah, up almost 28% from the low a couple of weeks ago. Actually, people even say that the Nucor position is more interesting than the UNH position.
It's because it's a smaller company and therefore somewhat, you know, larger relative bet. But the stock reaction in UNH is interesting because, I mean, Berkshire bought, it's like 0.6% of the company. It's a really small percentage of Berkshire's overall portfolio, meaning it's not some huge bet, but coming along with, as you say, Scott, the other big name investors that found value there, it is very telling. And I think it's kind of a keep it simple type of thing. This is a huge and indispensable company and the biggest component of our economy, really, in terms of growth and in terms of, you know, just being a toll taker of it. And the pendulum swings in insurance markets. They underpriced the risk or the medical cost for a long period of time. They took their pain. The earnings estimates for this year and next have been cut in half since the beginning of the year. So it's kind of a kitchen sink story. And obviously Berkshire Hathaway knows insurance and it knows that the premium cycle should, you know, could rationalize itself. Also, it got to like a 10 or 12-year low in valuation. UNH did.
I got to do a 180 with Stephanie Link and Steve Weiss from Halftime. You know, friends of ours, obviously, they had been buying this stock on multiple occasions as it kept hitting these new lows. I'm like, really? Like, what do you guys see? Now I'm like, hey, great call.
Yeah.
Great call.
Well, you mentioned Buffett knowing insurance. He also knows housing, and the positions in Lennar and DHI are going to move those names almost 4% this morning.
Yeah, these feel, and again, you always have to throw out the disclaimer, you know, it could be Buffett, it could be the other managers who run a small portion of the capital there. But I think it just says opportunistic moves in the smaller parts of the market that got dislocated to some degree. You know, obviously we know the secular story for home builders, but stocks themselves have suffered because of the mismatch in supply and demand, the affordability issues and the rates. So, you know, they want to own stuff forever or close to it if they can. And if you feel as if they're not making new ones. They're not making new, you know, big 5 home builders. And so you have to kind of buy them when you have a chance. And you're right in terms of him knowing housing related, right? It's everything from Clayton Homes to Benjamin Moore that Berkshire owns, as well as, you know, some other building products companies.
But the builders represent one of the biggest stories of the week in what was at least a broadening trade until it got a little derailed in the last day or so. This is right at the heart of it. The home builders had, along with the small caps, had one of the biggest moves on the idea that you're going to get rate cuts, and not just one. Maybe you'll get a jumbo, but when that idea was taken off the table, that trade reversed in some respects. But those have been the stocks to watch. And maybe they're trying to game that out at Berkshire Hathaway And if they're a little early, so be it. They see that kind of trade working in the later part of this year.
Oh, yeah. Page 1 of the Journal today, mortgage rates at a 10-month low.
Yeah.
Nice piece out of Business Week earlier in the week about Americans getting priced out of ownership. I think of all the U.S. metros, the only city in which it's still cheaper to rent or to buy a starter home than rent is Pittsburgh. I mean, that just shows you the lockout effect and the mobility of people unable to move for any reason. Get a new job, you name it.
Which, of course, is probably, if you're really advocating for the need for the Fed to resume rate cuts, that's kind of Exhibit A, right? You say that, and who knows what's going to happen to the long-term rates if you cut again and if it's really going to help. But it does help the builders. I mean, the builders actually still, their costs are somewhat driven by where short-term rates are and their ability to buy down mortgages and things like that. So, yeah, I do think that that it was sort of like, look, it's not a cheap market. Berkshire's been sitting on all this cash. There are parts of the economy that they still want to participate in, and when the stocks come in, they'll take a piece.
Meanwhile, Apple remains its largest position, although they trim it.
Again.
And today, Morgan Stanley, we think Apple's turning a corner with some decent data on phone sales.
Woodring, who's been a pretty long-time bull on that name, albeit with some questions over the last 4 to 6 months about what exactly was happening in China and what the tariff impact is going to be. But it feels like that story has turned, doesn't it, in a way more positive way. And if the catalyst of all that was this détente between Tim Cook and President Trump, you deliver a golden iPad to the Resolute desk, and
what's the phrase?
All's well.
A gadget and a pinky promise, I think, is the way some people put it.
And it really is. I mean, Apple's very much an eye of the beholder type situation. It really doesn't change that much. The financials don't change very quickly. It's very stable. It's always got the great balance sheet. It's all about whether they seem like they're turning the dial just slightly in the right or wrong direction, and maybe you can look on the bright side of their fortunes in this next upgrade cycle or with AI. Also, Berkshire, I mean, I think that the estimates of its cost basis in Apple are like in the 30s. I mean, it's all gravy at this point. And so they can trim around it, but still participate in it in a pretty significant way.
But can't you look at some of the moves that they made perceived out of like an Apple continually and into these more depressed and more value-oriented parts of the market?
Sure.
Builders, healthcare, not just the UNH, Centene, Molina, Elevance. I mean, if this isn't representative of a debate that's being had in the market right now, literally, I don't know what is.
No, exactly. And look, you can't say that Berkshire always nails, the contrarian move, right? They own Paramount, and kind of sold out of it before the deal happened. So there are times when it's going to, get caught in a value trap or kind of think something's going to come back more quickly than it does. But yes, in aggregate, I mean, for an investor whose main distinguishing factor, in my view, is his willingness to just allow opportunities to go by if they don't feel them compelling, the fact that they act is significant.
Finally, Intel this morning rising in the pre-market, extending yesterday's 7% gain. These published reports say the Trump administration's in talks with the chipmaker about having the U.S. government buy a stake in the company. It comes after Monday's meeting between Intel CEO Lip-Bu Tan and the president, who, of course, called for Tan's resignation last week. Nice little debate, Mike, about what it means for Intel when you're up 20% in a couple of weeks, because it's happened a few times this year.
Right. Well, yeah, because, I mean, it's obviously very depressed stock. Therefore, it's got this sort of like lottery ticket option value in it. It trades at book value now, right? So it seems as if it's kind of not really priced for having some great growth future. And yeah, fascinating on this score. I mean, this is a model where when the government has rescued a company or kind of backstopped a distressed situation, it has taken a piece, right? General Motors, we took warrants on the airlines during COVID when they bailed out the airline industry.
Do you think this is at that level?
No, that's my point. Yes. So like Intel wouldn't seem to be in that mode of like, okay, this is in the public interest of keeping Intel alive. But if you feel as it's strategic to be able to build and maintain domestic chip making capacity in this way, then it's defensible. If the government, of course, is also going to put in the actual capital, as I think the reports suggest, as opposed to just saying, give me some shares.
What if you make the argument that it is, in fact, just as vital to this country as a General Motors was in the most, deepest parts of the crisis? When you look at the Taiwan semis of the world and the strategic importance that they have relative to where Intel has really dropped to, maybe it does reach that level of national importance. Whether it's a moment of crisis under the traditional definition of or not, I think is a fair debate.
Well, look, the CHIPS Act was based on that idea, that we want to do everything we can as a government to make sure we have this domestic capacity. It was just in a different way.
Yeah, and we'll get to some of AMAT's guidance and what it says about fab delays. Let's
Good
get
morning.
to industrial production, though, right now with Rick Santelli. Hey, Rick.
Data didn't do anything.
Carl, indeed, this is our July read on industrial production in Cap Butte. And the numbers, well, we're expecting unchanged on production. Comes in light, minus 1/10, minus 1/10. Minus 1/10 will basically be comping to where we were in March. But there is some good news here. Last month had a nice number, up 0.3. That now becomes up 0.4. That's the second best number of the year in the rearview mirror. On utilization rates, 77.5. That's a little bit on the light side. 77.5 would be the lightest since 77.4.
Morning, bud.
Which would in May, if you
Good. I don't know if I should trade today or just not trade. It's Friday. I hate Friday. You did good. Were you trading last night or were you trading this morning? Oh, early. Nice. I don't see any movement. It's just choppy. You done for today? Oh, are you doing the Lucid challenge? How much are the reset? How much is it now? 47? Oh, you said 47, huh?
At T. Rowe Price, making investment moves with precision means asking questions others don't. It's how our managers design active ETFs to outperform.
Okay. Yeah, if you do reset them, just save one for the challenge coming up. You saw the Lucid Challenge channel, right? Yeah, either September or the end of the month. Maybe the 25th. I want to shoot for a Monday. Yeah. Did you sign up? Let me give you the sign up link.
Back into our community.
Oh, okay. We can start like a week prior. Yeah, that's the link. You can pick which one you want to join. The 50K, 100K, or 150K. Most people gonna do the 50K. The 150K for all those big timers. Yeah.
Everything that we do is focused on
Gambit.
personalizing that learning journey.
Big gambler.
In the public.
September 16th at LA. CNBC.
See, I'm scared to trade today because Trump and Putin's on. So if we get caught in like a tweet, well, fuck.
NHL Commissioner Gary Bettman, Monumental Sports and Entertainment's
It's OPEX too.
Global superstar Travis Scott, and more, breaking down investing opportunities in the business of sports and entertainment.
It is, but usually it dipped like a couple days prior, but it didn't really dump at all.
Mom, things are...
My radar screen is getting bearish squeeze, so I don't know what's going to happen.
Too. They let everyone in my
Do you see that one?
whatever plan they want. I save money and can keep the same low price for 3 years. Love that for me. I had to do it, I'm sorry. That's where that was.
Welcome to the show. The one with unimaginable entertainment. You can't help but be hard by it all. Sunday Night Baseball. Every Sunday, all season on ESPN.
You did.
The president is en route to Alaska, where he will meet with his Russian
10 a.m. to 9 a.m. Is that even big?
Raymond Jabbers has the latest this morning from D.C.
Orange.
Good morning to you, Carl. The president got underway early this morning, boarding Air Force One at Joint Base Andrews on his way to Anchorage, Alaska. The White House has billed this meeting as sort of a listening exercise between Trump and President Putin of Russia. The idea being they need to hear where Putin is in order to come up with a deal to end the Russia-Ukraine war. But at the same time, the president has expressed some optimism that Vladimir Putin might be ready to strike a deal this time. Here's what he said earlier this week.
I think that President Putin would like to see a deal. I think if I weren't president, he would take over all of Ukraine.
Yeah.
It's a war that should have never happened.
Well, you can't do that. It's not good enough for you.
In my opinion, he would much rather take over all of Ukraine. But I am president.
It's TPT, yeah, for the refund.
To get to Anchorage from Washington.
Yeah, Mugo's asking us, and this is the last week. If they could end Sunday for the refund.
Time, guys. What we're going to watch for here is the president's greeting with Putin.
You got the refund,
that
right?
Be the first indicator of how things are going.
Yeah.
How warm is that greeting? How encouraging is the body language before they go
If,
into that?
well, getting payouts not that easy.
A one-on-one meeting with translators, in addition to a bilateral lunch here with some of the officials who are traveling alongside the two leaders. And then the question is, do we get a side-by-side press conference?
Oh, you parked those, or you just got those 3 extras?
Relatively well. The President Trump, has said he will meet reporters after the fact, whether he's with Putin.
I might grab some maybe on the weekend, Saturday or something. I don't want to grab today. I might touch it and blow it up because
question, not sure that'll happen before the end
I still got 3 I'm trading, so yeah.
Hey, Scott, a deal for what is the question? Because the president has already told European leaders that he won't negotiate territorial issues today at all.
Yeah, I mean, there have been reports that the president is considering offering access to rare earth minerals and other things to the Russians. No word on whether that's accurate or not.
Nice.
So we're going to have to wait and see, Scott, but your point is well taken.
Yeah, you're milking it in.
The question is, what incentives can Trump offer Putin here to get a deal to the table?
It adds up. Like, let's say you make $300, $400 profit per account. That's almost $1,000 a day.
At this meeting, the president suggested there might be another meeting.
Yeah. That's why we all love TPT now.
So, you know,
and Doc,
today or not? The expectation is
Doc is killing it on trade day. I think he got almost 2,000 now in 3 days. Yeah, no, 4 days. Yeah, it's a full payout.
Take a look at the pre-market here. So much to get to.
Yeah, once it's funded, it's zero consistency and daily payouts after you hit the buffer. Same exact thing like TPT. Yeah, the only bad thing is that stupid eval is so long to get over. 7 days and 30%.
What's best for everyone who depends on it. Solving today's challenges.
Oh yeah, you did pass it, right? You just flipping. Well, you can't really flip, just trade small. Okay, that's good. Because Jay-Z tried to flip and just did one contract in and out, and they denied it. So no, you need to trade longer. Yeah.
It's creative, it's vibrant, and it's global. Design is everyone's business.
In the age of AI, smarter threats need smarter protection.
I got 6 minutes left. Looks like they want to pump at open, yeah. I might just take a long right now.
Order filled.
Orders submitted.
Well,
Charlotte AI gets smarter.
yeah, I might get fucked, but yeah, I'm gonna take a long. Yeah, I did get fucked.
Order filled.
Orders submitted.
Already in at 9:07. This fucker just dumped. Piece of shit. Always. Good thing it wasn't. Yeah. Good thing. I always get caught before open trying to long for the pump at open, but at least it's not the pro.
meant to be beautiful. I was
Oh no, it's my Tradeify, the one that's near dead. So I'm just trying to pump it up.
could afford dental
Okay, I'm
implants.
gonna hold
You
on.
and your team worked within my budget and helped me feel confident in the plan we made together.
Yeah, I should have waited, but.
Thank you.
Well, my TPT 150 I'm also low too.
Lifetime warranty on zirconia arches. Only at Clear Choice. Call to schedule a free consultation.
When emergency strikes, first responders rely on the latest technology. That's why T-Mobile created.
I'm just gonna dump it open.
Dedicates more capacity for first responders.
Growing up in
Oh,
New
well, I'm
York
with
City,
Lower
I was
Day,
always
yeah.
fascinated with architecture. When I got to CNBC, there was no real estate beat, so I pitched it. Then almost immediately, the housing crisis hit. It was insane. Ambition is reinvention. You have to keep moving forward.
We will talk about applied materials guidance in a bit. It's definitely leading the S&P lower pre-market as they guide below. Say they'll get more China digestion for several more quarters. Citi takes it off the focus list, and B of A cuts to neutral. It's obviously having a halo effect on semis and semi-equipment. We'll get the opening bell in a few moments. Don't go away.
Introducing CNBC Plus, the new streaming platform from the #1 source in business news. Watch live or on demand. Access any market, anytime, anywhere. Start streaming. Go to cnbc.com/plus.
There you go. My TPT.
Today, let's pay with Bear. America's
Order
most trusted
cancel.
That out.
We don't have Bear.
Do we need that?
Well, this year's a paint and primer. It just says ain't.
You bought 8.
Well, with Bear, you can paint a whole room for under $100. How much did you spend? Like a lot more. Oh.
I thought you said you researched this.
Aren't all paints the same? No, they're not. Don't overpay for your next project. Get Bear quality at an everyday low price. Only at the Home Depot.
Oh, your music's loud, Google.
Travel?
Google, what the hell? Your music's so loud.
Luckily, you rented your car.
Oh, ghetto ass music.
Skip the rental.
Oh, what a bump! I got out.
Rent just about any car, just about anywhere.
Google, turn your music down.
Your company started in the kitchen.
Hello?
Now it has 3. Your team of 5 grew to an army of 500. And that's your logo, right there in marble.
That's big.
To grow your business from big to bigger, you need an advisor built for the middle market. Our data shows.
Yeah, we gotta mute Google. Oh, music spammer, man.
Stevens, insights.
Yeah, I add in mute.
CEO, there's just 2 magic words you need to know. Minimum viability. It's knowing the core functions you need to get your business back, and the cost if you don't. And recovering this fast. Commvault restores the viability of your data, apps, and business in just minutes. Like it never happened. It's the fastest, most complete recovery.
Why was that pumping? Went back down. This is OPEX. This is garbage.
Invest with foresight and vision to anticipate the needs of future generations.
This pump got me out, but damn.
Portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 125 years of yesterdays, Nuveen knows your ultimate stakeholder is tomorrow. Nuveen. Invest like the future is
Dude, tell me to go to music with loud. It's not
The
just
opening
me.
bell is brought to you by Nuveen. Invest like the future is watching.
Well, we knew it would be a consequential week with CPI and PPI and retail sales. We've been through a lot trying to assemble various clues about the future of the economy, Mike, but
Yeah,
through all of it, the
music's
VIX
still
is
on.
really
Oh, let it dump. Let it dump.
So we've kind of compressed the margin of safety here a little bit. People are very comfortable with the rotation. It's keeping the index afloat near all-time highs, but we'll see. Late summer can get stormy. Things will get interesting next week as
Dang,
well.
that's a weird movement. I'm scared now. I'm scared. Your music's still so loud.
The reshape life sciences, it's like we're looking for some record opens here of this Friday. I was fascinated by the debate you guys had on the half this week about whether it is one of the best environments for investing ever.
It's like Rick Reeder at BlackRock put forward that perspective
I don't know what to
that
do.
earnings continue to produce, that even if you're hung up on the multiples in some stocks, the earnings power that those particular names have,
I mean,
justified.
bought is short since yesterday afternoon. That's a long time ago.
Looks really attractive, and on and on. The Fed's going to cut rates. They're going to cut. It may not be on your time frame, but they're going to do it.
I think from a putting a portfolio together perspective, what Reader is kind of getting at is there's enough to do with bonds, yielding enough to act as a cushion, and you can lever them, and you can pick your spots and credit spread. Look, whether it's the best ever in terms of the question, it's reflecting a great investment environment.
I didn't say two. Yeah, it's like it's just let's just put every single penny we have into all of the markets right now. He's like, yes, there could be some near-term volatility, but big picture, the environment has rarely looked better than it does now.
I love the chart today out of B of A, Michael Hartman. Looking at S&P price to book, it's a record 5.3. The AI boom, he argues currency debasement, and then a generation of retail that has
order
filled in real estate, and they're favoring stocks as a result.
There's no doubt there's been a long-term inflation of.
Oh my God, this movement is scary as shit. Woo! Got out.
Today is you to tell me the S&P is an elevated price to book. Because if you're all he's saying is it better be different this time. It's different in the sense of the kind of companies that are making up the S&P 500. Like Microsoft's book value is 100% irrelevant. Like it doesn't matter. Back when it was counting up the value of factories and vehicles and land, that was somewhat different. But nonetheless, valuations, however you slice it, are high. You can make a rationale for why they ought to be high, but you can't say they're not high, I think. And that's one of the issues we deal with. Look, the S&P right now is at a 10% year-to-date gain. After all we went through, after a near 20% drop by early April, it's actually already past 10% on a total return basis this year. Yeah. A lot of it's the mega caps moving it. On a 3-year basis, we're above 16% total. This market owes you nothing. But to your point about retail, it's push until you're forced to kind of give it up. Financial conditions are really loose. This is what's an interesting element of talking about we're getting a Fed rate cut next month. Okay? Valuations are high, markets are at records.
Oh, not gonna pay on this Chronos.
IPO window is open, credit spreads are near historic tights, M&A's moving, retail investors are feeling it. Like, welcome to the fun part, right? And yet you might still.
Every time I mute Google, the music's still there.
And I think that's why Scott was saying earlier is the market sometimes acts that that's going to be recreational drugs, not medicine.
Yeah, well, it's going to be recreational, certainly for the housing market, as Carl was saying. Yeah. The market's been frozen for what feels like forever now, so that's the one part of the economy that is clearly.
Yeah, that bear screw is correct though. It jumped from the bear screw.
Today suggests that the consumer's still hanging in there pretty well. Yeah. I wanted to note Target, if we could, quickly, just because we're talking about retail and the economy this morning. Target got downgraded by B of A. If you want to take a look at that, I thought interesting in the components within retail, clothing and accessories up, back to school, probably, having something to do with that. Maybe getting an early jump there, but Target seems to be falling behind, according to Bank of America. They go to underweight from neutral. A stock to watch, and Carl, you laid it out. We're going to get some big names next week too.
Man. Next week, I mean, there's different elements of retail. We'll get Home Depot and Lowe's and Toll, but you got to want to hear from Walmart and from Target. Nice piece in the Journal today on the op-ed page about mentioning real wages going stagnant, that adds, you can stack that on to what we've already heard out of Sweet Green, Chipotle, and Cava, which are obviously granular and anecdotal, but do they say something broader about the consumer?
Well, Wendy's, Chipotle, Jack in the Box. I mean, you go down the list, you can find many names. Now, on the retail side of things, that's where the tariff impact seems to be most acute. Tapestry, Under Armour, Crocs, Ralph.
Can you tell Google that it's the music? Like,
margins.
dude,
That's
you
something to keep a real close
driving me
eye on.
crazy. Stupid music.
The target question is really as to whether the company and the franchise is getting sidelined. It's looked cheap for a while. They're obviously not able to get the comp trends back where they want them. It trades at like less than half of
Yeah, we gotta trade. We ain't got time for
TJX,
this.
who I think we get next week, 2.5 times sales, right? I mean, the market's just told you where the flow is headed. Whether that continues or not, I do think it's making Target tricky as a macro indicator at this point. But in general, you're right.
I want a long at 850 though.
Retail sales have held in.
Ooh,
We have
yeah,
1.2%
I want
unemployment.
to, but
Wages are growing not
yeah,
nearly
just
as
went
fast
short, so I don't know.
as they were, but they're growing at a 5% total payroll rate. So it's like, you know, until that stops, you're not going to see an issue. Also, some talk of credit delinquencies having actually crested and rolled over a little
Yeah.
bit in the short term. Yeah, credit card, 90 days, delinquent.
3 minutes is flatlining, looks like it's turning down, but 15 minutes just straight in the middle, which is just chop.
Post-pandemic,
So I can't really tell.
people had repaired credit scores, they took on too much, etc. So we'll see. You know, I think that to me, what I would worry about is if you get either the Fed trying to take away expectations for a September cut, or the data reduce the
Yeah,
odds
they
of
don't get
September
caught.
cut.
That's the thing. They're long at open.
Doesn't crash on that, if the 10-year doesn't, if you don't have a massive flattening of the curve and you're rally at the long end, then the market is telling you it's not inherently a policy mistake, right? What you don't want to see is rate cut odds go down and the market freaks out and says that's a policy error, they're falling behind the curve, we're going to buy 10s. That's what happened in the growth scare late last year, which preceded the half-point cut to start the easing cycle.
Can I bring up one more interesting Open Door is up more than 8.5%. It's up 68% week to date. That's been at the heart, in many respects, of some of these retail, culty, meme type stocks that have gone ballistic lately. You've talked a lot about this and what you think it might mean in this environment.
This is one where it checks so many of those boxes because it was a moonshot in the 2021 rush for unprofitable tech.
It's dropping again.
Obviously, it's real estate, it's housing. So it has that extra lever if you think that part of the market is coming out. And yes, it's been memed and it was kind of left for dead. And you know, it's been a handful of those that have been reborn. And I think it is of a piece with a general pockets of this market. Goldman is pretty good on some of this in the last little while, saying you're seeing this fever break out in those types of stocks. And some of the IPOs,
Yeah, I'll give it.
keep bullish. Let's go bullish. Yeah, while you're doing bullish.
All right, watch me unmute Google, okay?
Figma, right? 3 of the big ones recently.
See? That music is still there.
But they're all down.
Yeah, I'm not going crazy.
The first or second or third day high. There you go. And so that just sort
I
of
got a
tells
virus.
you get a kind of a sugar rush of demand at the beginning, and then they have to settle out from there. Doesn't seem to be deterring much of anything. The Robinhood numbers continue to look good. Robinhood stock itself has a little bit of a plateau here, but it's up huge on a year-to-date basis. And I do think that professionals on the street are
And bot's still short.
how do we think about this?
That's from
Is this
like
just going to
yesterday afternoon,
as
so
far as
I
the
don't
eye
know.
can see, an element of the market that's supportive,
I might
or
get
is it
my
going to be the
850.
ingredients of some kind of an overshoot that makes the market less stable and creates some kind of a reckoning? And yeah, I don't think we have evidence of the latter yet. Yeah. Well, Circle's no dummy. They price 10 million at 130. That's why you say maybe a little pressure on the shares today. Interesting times, I think, guys, for software. CRM finally gets an upgrade. DA Davidson today goes to neutral. They think that maybe Starboard's increased stake will put pressure on management to work on margins and the core business. Don't do any M&A. That's too dilutive. That's a name that Kramer, of course, has been all over. And Melius, for example, has been pretty resolute on the impact that software is taking from AI. Correct?
If Adobe, of course,
Order filled.
So many different names. Adobe, maybe Cadence. Some
Order
of the names that have
submitted.
gotten absolutely blasted off of their or from
Order
their
filled.
Order
I
filled.
mean, this is in there.
Order
That's in
Order
there.
filled.
Adobe.
Order filled.
filled.
I did not know my pro was in there. Oh shit, I made $46 in that long.
Is AI killing software? I think that's a real legit debate in the market when you're having the SMH, for example, trade at a all-time high, and the IGV starting to look at
Order filled.
Order
submitted.
I mean, Adobe and Salesforce are like dead money on 5 years. I mean, it's actually pretty critical in terms of the market's estimation of what their runway is, how wide their moat is, and they were never cheap. So that's the issue as well. Now, in terms of whether the market's kind of overshooting in this little
There we go. Hell yeah.
it shows that we're out of the
Connection
era
lost.
of everybody wins, in the AI story, and I don't know how to necessarily shape that debate. I mean, we got the AMAT numbers that is putting pressure on semi-cap equipment names right here. And so the question is whether it starts to feel like either a little bit zero-sum or whether there's just a little bit of hesitation in this open-ended growth story of that we can't ever have too much capacity and supply in semis.
Gary Dickerson of AMAT did talk about sort of the impact and why they had this guidance that is sending the shares lower today. Take a listen.
Order filled. Order filled.
Expect revenues and earnings to be sequentially lower in our fourth quarter, primarily due to uncertainties in our China business. Our long-term growth thesis for the semiconductor industry and applied materials remains unchanged as companies and countries compete to win the race for AI leadership. And Applied is best positioned as a major device and
Getting scary now with this drop.
the AI roadmap.
All my bear squeeds are gone. There's only 2 left now.
Sympathy, but raising interesting questions about the semi-cap equipment cycle, at least.
Yeah, for sure.
Order filled.
This is the part of the market that is
Order submitted.
There we go.
increased capacity down the road, right? And the stocks aren't expensive. They never are. They're really capital intensive. Interesting, it's not really torpedoing the overall NASDAQ. I mean, I know that's been the big interplay on a given day is what kinds of names are going to work. And, it's not obviously been immune, but it just seems as if the market wants to kind of stay out of the way of any danger before the end of the week, not really compromise the gains we built up. Well, thank you, mega caps, because the
submitted.
AMDs, the Microns, the Broadcoms, Nvidia's lower. Anything really chip related is getting hit
Order
on the
submitted.
Applied Materials guide. But the market's being held up by the tried and true.
Order submitted.
That has been sort of your place.
Order
filled. To play offense, you can play defense, you can play a little bit of special teams if you want to with those stocks too.
No, it absolutely is. The choreography is again back in gear in terms of that rotation.
Order
filled.
Order filled.
Have some questions about
That was good.
and all the rest of it.
Order
I don't know if you can
Order submitted.
this is just going to be
Give me
the
my
way it
money.
is. There's
Hell yeah.
obviously a lot of interest. A lot of the
I'm gonna get caught sooner or later buying this dip.
Look, the big money still hasn't gotten its exposures up high enough. And that's a little bit tougher case to make, I think. If you see like the systematic
Order submitted.
hedge funds, they've pretty much topped themselves up. And buybacks
Order
have probably been
submitted.
stronger than anticipated. I know that's the cycle.
I got out too early.
I said it's a psychological shit got over.
Oh, I caught some of it though, right?
In fact, it does get overdone in terms of as an aggregate source of demand, but I do think that it's when you see the numbers in there on a daily basis and the big.
Oh no, we've been buying a dip.
It seems like it fits in.
Going against a bot.
Order canceled.
Ease back on some reason. You guys want to hit Cisco real quick?
I was going to say it's tech isn't being helped by this down.
I sent you here. Let me unmute Google so you can hear. Okay. Hold on. Let me listen.
Restocking party.
Say okay.
Seems over. Thought you guys had a good conversation. Was it?
You heard that music too, right? Okay. It's Google. Fucking Google.
AI demand is, and they beat. The stock was down on the earnings as well. You following this?
Yeah. I mean, they got revenue up 5, and there were some slowdowns in networking, and this is actually their first real dip below the 50-day since May or so. And it's not
so scary going long all the time.
It's not expensive. It's not as cheap as it has been at times.
Let's see what's the next level lower.
Tricky it has been for companies that are.
Oh, 812 is the next level. That's
to acquire
3 minutes at the downside.
Sheen, and that's Cisco has struggled to do that a little bit. I mean, for years it was kind of like GDP plus or minus was the top line. So I do think that that's a little bit of an issue. They're not going to get the trust that they're kind of riding the big secular wave in a way you can just plug it in every quarter.
Interesting, kind of refreshing to get an all-time high on the Dow, Mike.
Yeah.
We can debate about it.
Order filled.
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 Since we
Holy
haven't
shit.
had 45. I was just looking earlier. Maybe you can talk about
Order
the
submitted.
crazy weighting of it. Goldman's like a $750 stock right now. It's like 3 times Amazon's influence in the Dow, and it's a tenth of the market cap. So you have to know what's driving it and why.
Oh, that's a big drop. I got stuck in the wall.
Lilly is actually the second biggest upside contributor.
Gosh, all the leaders today.
Yeah.
Scott's earlier point, Molina,
Order filled.
Order filled.
Order submitted.
Cigna.
Wow, that drop.
J&J quietly breaking out as well. J&J is in healthcare.
Meantime, so Dow's up 213. S&P's flirting with losses and gains here at the open. Watch bonds.
Come
these days
on,
busy
pump
making
it
that
up.
between retail sales and industrial production. We're not done yet. We'll get business inventories and UMISH in about 15 minutes, with the 10-year still between that range of low 4.2s and 4.3. Back in a moment.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
This is a new chapter of Ambic Micro. With our solutions, we will
Order
enable
canceled.
edge AI
Order
everywhere.
submitted.
Your life will be changed forever.
Order filled.
Order
Order
filled.
canceled.
Not really. 3 minutes got more room for downside.
Order canceled. Order submitted.
Well, OPEX. Soon.
Is this your dream of retirement? How about this sweet deal? I like fishing.
Yeah, we might lose 800. That's gonna be scary.
Retiring well isn't a guarantee. It's a goal. It's
Oh, you're not long yet? I'm stuck at long at 80. I'm sorry, 830.
That's why you need this. Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher Investments Difference. 3 indispensable
And my
guides.
birth
Yours
800.
free for
Ooh.
calling 1-800-213-5317.
So after that will
Fisher
be
Investments' disciplined
743.
approach will
Oh
help
my
see you
goodness.
through the market's ups and downs.
It's not
and give you
close
the
a state.
confidence you need to reach a comfortable retirement. And our fees are structured so we
Yeah,
do
let's
better
go
when our
800.
clients do better. Free retirement survival kit. 1-800-213-5317.
Order submitted.
See if your dream
we hit
retirement is on track.
again.
If your portfolio is $1 million or more,
Order
call
filled.
Order filled.
Order submitted.
1-800-213-5317.
Order
Order
canceled.
filled.
Customers deserve the best, and the best just got much better. AG1 Next Gen has launched with upgraded B vitamins and probiotic blend backed by gold standard clinical trials. It's time for the next generation of AG1.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
The PGA Tour season is nearing the finish line, where every round is a reckoning, each hole a test of nerve and belief. The FedEx Cup Playoffs BMW Championship.
Yeah, I think my long is soon. When I get stuck big time, we don't pump.
Order filled.
Yeah. Wow.
Coming up, this $4 million Ferrari would not be subject to tariffs because it's older than 25 years old. But a new Ferrari could cost you an extra 15% soon. We talked to the supercar CEOs about what they're seeing on tariffs and what they're hearing from their wealthy clients. Coming up right after the break.
Right, it's me. I mean, you. Wake up. Come on, man. You got to tell employers to take another look at all the benefits they're offering. Everybody
Order submitted.
best team and offer Aflac and health a
attract and retain that top talent.
Order
Like
submitted.
that top talent. And listen, I mean, you gotta listen. Aflac gives employees cash to help with unexpected medical bills. It's prime time to add Aflac.
Come on, baby. Give us a pump.
Request a call today at aflac.com/prime.
The first day back from maternity leave is so weird. We get it. Find a caregiver who does too. When it's not you, it's care.com.
This is Jess, marathon instructor, educator, game changer. She needs her money to work as hard as she does. That's why she uses U.S. Bank Smartly checking and savings, which does exactly that, helping her track her spending and grow her money. Together, we'll achieve more than any of us could alone. You got this, Jess.
We got this.
That's the power of Jess, and this
Order
is the
submitted.
power of us.
The digital gold that is data has never been more important.
I know we're prepared. We've done the hard work. We're going to keep getting better.
Let me check on my
Deliver
puts.
clients.
Yeah, my putt's still not green. That's weird.
Checking the markets throughout the trading session, working the phones, talking to sources to share insights, information, and all of the details that you need to
Well,
make
3 minutes is close to being oversold. Like 15 minutes
Now
curving
that I'm a
down.
mom, things are different. Verizon's different too. They let everyone in my family choose different plans. We get what we want and we save money. Love that for me.
The Nissan Rogue takes head after
Give me
head.
8:30. Give me 8:30.
Punished under immense pressure. And exposed to excessive wear.
Hopefully.
Nissan.
Yes,
number one
it's
in
getting
vehicle
there.
Quality.
It's a milk.
We put it through the worst, so you get its best.
There we go. Nope.
From Lamborghini to McLaren, these new 15%
Yeah.
tariffs on sports cars wasn't as
It's
bad
near the
as some
bottom. It
expected, but it
might
could
bounce
cause even some
later.
of the
I don't
wealthiest
think so
buyers
yet.
to hold off on purchasing a new car. Robert Frank is live from Pebble Beach this morning with that story. Morning, Robert.
Oh, is that data coming up in 7 minutes?
Well, classic cars are
Uh,
exempt from tariffs. So this
let me cancel.
1969
Order
Lamborghini,
canceled.
I'll cancel
estimated
this
at
long
$2 million,
just in case.
would only pay the existing 2.5% duty, so they wouldn't pay any extra tariffs. But a new Lamborghini is going to cost you a lot more. We talked to the CEO of Lamborghini yesterday, who said that right now Lamborghini buyers are paying
Protect those Pro.
27.5%. So that's the
My
2.5%
dip.
existing plus the 25% tariff that was announced
Ooh, it's
back
going
in
down.
March. Now, you might remember we did a deal with the European Union for a 15% tariff, but that
Somebody.
has not taken effect yet. Take a listen.
Oh shit.
The point is that
Yeah.
all the cars that we're delivering now, they are sold already in the last year or even before that. So it's clear that if the things change, we have to be
Are
flexible.
you stuck in the
and
long like
together
me?
with our partners, the dealers, there's a lot of flexibility.
I'm down like
I also spoke with the CEO of
1,400 on
Rolls-Royce
this
yesterday. They're
150.
subject to 10% tariffs because the UK did that special deal with the US. They haven't said exactly who's going to pay that again. They're in a similar situation where customers are taking deliveries of cars they may have ordered a year or two ago, but they have guaranteed pricing for Rolls-Royce buyers who bought, let's say, a year ago.
How long were
But
you
they
there?
are expecting to
Let me
probably
get
raise
70.
all
Order
their
submitted.
prices next year another
You want to die?
7% more than normal to make up the difference.
Okay.
So a
Damn
lot
it.
of
I didn't get in.
confusion, a lot of
I have a long at
ever-changing
75. I'm
numbers,
going to
which is
lower
why
it down to
cars
70.
and
Order
the folks
canceled.
there is why the wealthy
Order
buyers
submitted.
are really sort of on pause right now, both for the new cars as well as the classic
So
car
why didn't we
market,
short
where
with
a
the
lot of
bot?
business owners still are grappling with some of this uncertainty.
How does that
Yeah.
fit in with, I
Got
guess, what
100
we're seeing more
points.
broadly in luxury? I know it's been kind of spotty, whether it is tariffs or, like you say, just a little more of a hesitation.
Yeah, I think the luxury business is
Maybe for
obviously a
you.
lower price point, but across the board, no matter how wealthy you are, you care about money. You care about what you spend. And if you think there's a chance that this tariff, this extra money you're paying, whether it's for a $400,000 Lamborghini or a $10,000 Chanel bag, if that number's going to change.
Oh, that lawn would have been so good. Fuck.
You're probably just going to say, look, I'm going to wait until this settle down. And that's what we're seeing in luxury, in classic cars, and in new cars.
It's interesting, Robert, on a day where we're seeing all-time highs on the Dow and the S&P. We normally talk about the wealth effect, but it's a little more complicated this time.
They can't see you.
All day long. Robert Frank out at Pebble Beach. Scott, really loved having you on the 9. Appreciate it.
Fun to be here.
You're going to be busy today.
I will be. And halftime report, Josh Brown has his latest stock to make his best stocks in the market list. So I hope you all join me then.
So we heard from Berkshire Hathaway.
We did.
So now you get to hear from
Exactly. Now you hear from Josh Brown. We'll see if it has the same impact on the market.
No.
I don't know if I bet on that, but we'll see.
And you're going to give out those apologies about the UNH buyers.
Yes, exactly.
And then this afternoon, coverage of the
Milk is
president's
close to us, man.
Will at 3 o'clock of closing bell. That's going to be right in the center of all of that unfolding. So we'll cover that as well.
Yeah, come on, give me 8:30.
Yep.
Meantime, losing a little bit of steam here as the S&P settles about 9 points into the red. Dow's off session highs, but still up 155 on that UNH.
Oh, no, that's someone else. No, that's another person. Yeah.
Everything that we do is focused on personalizing that learning journey.
And we can't wait to see where more
Let me cancel this long.
Order
Just in case it dump from the data.
It won't be hard to find someone to fix this. But before I started Angie's
Milk, I got bamboozled.
A lot has changed for
I
us
got
at Angie
bamboozled,
since
Milk.
then,
I
but
didn't
the
get the
issues
credit.
facing homeowners are the same, and the solution too. Skilled local pros. Get started at Angie.com.
Are you living with dry
Yeah,
AMD?
I got the credit.
So you could be on the road to geographic atrophy or GA.
I think, I don't know.
GA can be unpredictable and progress rapidly.
But I'm pretty
causing
sure it is. It's yours.
irreversible vision loss. But with iSurvey, you can ask your doctor about iSurvey.
Give me 8:30 so I can get out.
iSurvey is the #1 prescribed
Order
FDA
canceled.
treatment for new
Yeah.
GA patients. iSurvey is an eye injection. Don't take it if you
This
have
is for my
infection
fund
or
number.
it's submitted in or around
The
your
GPT, I need
infection,
836.
retinal detachment, or increased risk of wet AMD. iSurvey may temporarily increase eye pressure. Do not drive or use machinery until vision has recovered after an eye injection or exam.
Slim here. I'm so jealous. He's over there milking it. Like 600, 800 a day. I'm over here making $50 a day.
Or GA. Don't delay. Ask your doctor about iSurvey today.
What if the future of finance wasn't built around averages, but around you? At Abacus Global Management, we're redefining financial strategy around lifespan. This is a new era of investing built on the truth of your life. Welcome to Abacus Global Management.
We're Public Rec. For guys who don't do fussy or fashiony, stretchy, breathable, and built to fit. It's a cheat code for looking good, minus the effort. Stay you. We'll keep you comfortable while you do it.
We got 1 minute to data.
Management begins and ends with you. We believe the more personal the solution, the more powerful the
Yeah,
result.
I make sure I don't touch any of the other stuff.
We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
No, it hasn't come out yet. It's got a minute left.
Never miss a moment.
U.S. businesses have borne most of the tariff costs so far because it takes time to negotiate lower import prices or to pass price increases along to consumers.
I think they will ultimately catch it in September. The only thing that could derail it is if you got a surprise in the job report early September. I don't expect that.
One of the reasons why it's a great investment environment, there's a lot of news flow that allows you to take advantage
Boy, the
of
bot. Hey, at least I'm always short, right? I went long this time.
Good Friday morning. Welcome to Squawk in the Street. I'm Carl Quintanilla with Leslie Picker.
I got 10
here at
seconds.
Post 9 of the New York Stock Exchange. David and Sarah have the morning off. Busy Friday morning between some macro data, a bunch of corporate stories. Watch markets, though. Got an all-time high on the S&P. And
There we
actually
go.
Dow, thanks to you.
Whoa, that's a big dip. I'm fucked. Oh, shit. My Ninja Trader froze. What the fuck?
Maybe closer to the range of the past 5 days or so. Coming up today, the Buffett bounce. The Oracle of Omaha's move into UNH, sending shares soaring today.
Order canceled.
How Berkshire and its portfolio is shaping
I don't know
up.
about Ninja Trader just got back in. Holy shit.
Says the U.S. government is looking at taking a stake in the chip maker, but we have someone who says it would help the company's cash problem, but it's not a tech problem. He'll explain.
Wow.
And then running for the exits, more on why shares of CoreWeave got crushed yesterday, although getting a slight bump this morning, up a little more.
Oh shit.
But first, breaking economic data just crossing. Rick Santelli has that for us. Hey, Rick.
Yes, let's start out with University of Michigan sentiment. Now, these are August preliminary numbers, so they'll change in a couple weeks. I'll tell you right off the bat, they're sequentially lower. We're expecting a headline number around 62. Our last final month read was 61.7, 58.6. 58.6. That's the weakest since May when it was 52.2 and April when it was 52.2. Now, if we look at current conditions, 60.9.
I have a dip buy, but it didn't hit because my Ninja Trader froze.
60.9, also the weakest since May. You remember, April, May had some very low reads. These are surveys. They get affected by a lot of things. Now, if we look at expectations, what lies ahead, this is the closest to the rear view mirror.
Oh shit, I may be able to get out. Let's go, baby.
Last month, July.
Hey, if I get out, I'm gonna unmute Google and we can listen to that shitty music.
57.2, that would be the weakest also since May when it was well below that at 47.9. Maybe the most
a little bit more.
important
Let me get out.
aspect of these is the inflation numbers. They're coming back to a
There we
reality.
go.
Order filled.
Got out on one of them.
Follows 4.5.
Order
filled.
Yes, get me out, get me out.
Order filled.
I'm all out. Oh, fuck you, bot.
May of 6.6%. Finally, 5 to 10-year inflation.
Alright, let's see what you got music on.
Both these inflation numbers are higher than
Yeah.
expectations. Both of these inflation numbers are higher than rear view mirror. 3.9%.
That's a send shitty music.
3.4%. 3.9. Well, 3.5 was in February.
Oh, okay, that feels good. I'm flat now.
The high watermark there was April at 4.4. Now we also have business inventories. This is
That
a
was
June
nice.
number, always 2 months in arrears, expecting up 2/10. It delivered exactly up
Got 600 in a trader
If we
find.
look at interest rates, Carl said it. You know, basically, it is a very, very, very well-behaved market. If you don't look at the
So the data's
volatility
good?
Tuesday and Thursday, just look at from last
Order
Friday.
submitted.
Right now at 429. Well, we closed at 428 last week in
They
tech,
pumped.
so they're up 1 basis point basis.
Order
We're at
submitted.
372 right now, 371 change, 372. That's down 5 on the week, virtually unchanged on a 2-year. So yes, we've seen
I'm gonna
very
read long
low
again.
interest rates on futures also.
Instead of another drop, I can long.
Carl, back to you. Have a good weekend.
You too, Rick. Thanks for some stellar work all week long. Rick Santelli.
Wow.
helping us understand the data today. Mike,
Son of a bitch.
reaction? What
Not a lot. I mean, it did wobble a little bit. You know, 2-year yield is kind of subdued on it.
Wait for a dip and we just buy it up again.
The inflation expectation number from the survey very much in run.
3 minutes is over, so it might bounce up, and then 15 minutes still got a downside, so we'll get another dip.
Maybe it does also reflect. I mean, look, we got the really poor payroll revisions, and within the conference board surveys, the jobs hard to get measures and the outlook measures have been also under pressure. So maybe that is somewhat
Where's your
in
mic,
sync with
Q-tip?
a little bit of a soft spot in consumer sentiment from Michigan. I mean, I wouldn't necessarily say it's reflecting behavior too directly, as we just saw with the retail sales. But you know, it's sort of like the relief from not getting max tariffs that lasted May and into June maybe has worn off to a degree.
Yeah, that was going to be my question. What you make of kind of the superlatives here being the weakest since that April-May timeframe, when we did see so much volatility and so much consternation. Now you've got, you know, markets sitting much higher levels.
Dang.
Well, the markets are much higher levels for sure, and you know, in
I'm
general,
gonna jump in the long again.
mostly hung in. I think the question is whether it's just
Yeah,
this kind
maybe
of
I
policy
gotta
noise is still elevated relative to, you know, what people.
Yeah, I can't hear
remember
you.
from not too long ago. and that's
Q-tip. Looks like you have yourself muted.
We know, of course, also the political component of these things too.
We've spent the last couple of weeks talking about the reliability.
I know, I got out so early.
Sometimes it's response rate, sometimes it's political bias, some would argue, but you can slice it up.
Good shit, regardless.
Some time ago, and
Get the
that
second
seemed to have
payoff in the
accounted
freebies.
for a lot of the skew.
Are we still seeing a pretty big gap between between soft and hard data?
Good question. I guess probably not as wide as it was a little while back. Economic surprise has more or less been okay. I think it's not really suffered that much, and most of the survey work has been more just kind of chopping around the same range. ISM, that's soft data, kind of, and that hasn't really improved all that much, but it's not in the dumps.
Yeah, we didn't really mention the Reuters piece today, looking at whether banks are going to change their research
Think that's the
modeling
bottom?
because of pressure from the White House. Jack Ablett makes a great point in the piece, saying that it's really small investors who will suffer because they won't have access to maybe some of the most robust research operations.
Yeah, and research is regulated by FINRA, so this is not something that necessarily gets isolated or operates in a vacuum. It does have oversight by FINRA, which is this kind of self-governing body for the financial services.
I mean, to me, it's the absolute coin of the realm. If you are providing economic or macro or company-based research, is do investors find that it reflects ultimate reality in markets? The market, and so to me, you're not going to sort of pull punches or massage your research if the market's going to immediately make you look foolish, right? So I think it's a matter of what the market takes out of whatever data flow we get from here on out.
Yeah, and I think it's also a matter of what's the worst that could happen. I mean, you have a Truth Social post by the president criticizing your work and saying you should be fired. Okay, those are words. You actually get fired. I mean, like, does it? Are there
Really? They made shit.
the words, or is it just kind of a one-day post and then
You and
everybody moves
Google
on?
have a
I
mic
think,
issue.
is it an Intel situation, or is it a
Google that's spamming music like crazy. The same music too.
Sticking with the economy, Chicago Fed President Austin Goolsbee on Squawk Box earlier this morning, giving his first take to this week's inflation reports.
I still think underneath all of this,
What happened?
we were in a strong position on the economy going into April, and there are still a lot of strengths in the economy. So if we can assure ourselves or get a hint that for this meeting or the meetings this fall, that we aren't on an inflationary spiral that looks to be persistent, I still think it makes sense, given the strength of the economy, to move rates more.
Your long might be good.
We think they're going to settle.
Joining us here at Post 9 to discuss Mona Mahajan, Edward Jones,
I hate that.
and Head of Investment Strategy. Mona, thank you for being here. What do you make of Goolsbee's comments there, especially in light of what we've seen from the data over the past week?
Yeah, look, he has a point. This economy has held up to some extent. We have seen that certainly in the earnings picture. We're looking at 10% year-on-year earnings growth for the second quarter, on pace for double digits likely by the end of the year. That's a great sign for markets. We have seen,
Where you long at?
retail sales this morning points to it. The consumer has held up okay.
Oh.
Now, to the broader
That's your
point
pro?
of the economy, we
Yeah,
do
get out,
see
get out.
a little
58,
bit softening
get
in
out.
the second half of the year, not recession.
The one of the 58, just get out.
The narrative has shifted now as we look into 2026. We're looking for lower interest
Just
rates.
get out. You got 57, just get out.
Place, by the way, that will probably start to kick in next year, and we continue to see the earnings growth story.
You got out, right? Oh my God.
That setup as we head to year end.
So, given those cross currents, do you think there is enough of a case to be made for say,
Market close. Yeah,
what do you expect to see next
that
week
2
in
NQ is
Jacksonville?
brutal, especially on the small
Look, I think the
account.
market actually swung pretty far.
Watch
right
it goes
now.
up now.
We think 1 to 2 is more likely. We're still dealing with an inflation narrative with CPI above the Fed's 2% target, PC likely as well. But I think what really shifted was that labor market.
Hold on, let me unmute
We
you.
are now seeing a clear sign of cooling, not only for the July data, but of course the last 2 months prior to
Yeah,
that. were
your music is still there,
So
Google.
a cooling labor market with inflation that we think remains contained to a large part would
I
probably.
think you have a virus, dude. It's the same music too, just replaying over and
move
over.
rates towards a neutral level, towards that 3.5% or so.
Do you expect then to see?
I think he did.
Jerome Powell next week kind of walk back this notion of 3 cuts, just given.
No, all you hear is your music.
More optionality as it comes to kind of the fall and the winter timeframe.
Yeah, look, I think Powell usually uses this platform to signal if there is a shift in policy, a shift in narrative. We think he will.
I'm not lying. We're not lying about it. It's just you, not us. It's you.
Probably a 50 basis point rate cut is off the table at this point. Whether or not he'll guide to.
Damn, now went up to 65. Look at that shit.
We think
Wow.
certainly he could guide towards a Fed that is now poised to move towards a neutral rate. So we do think a shift in narrative next week will be an interesting one to watch.
I want to go long now.
earnings growth numbers are looking.
Yeah, because the 3 minutes it looks going up.
Through this earnings season. So
I'm
that's all
scared though.
positive, although it still continues to be dominated by the very largest stocks.
Fuck
So
it.
what does that mean from an investment
Order
perspective?
canceled.
Yeah, it's a
Order
good point.
I'm
filled.
long at
Tech
59.
AI story.
Order submitted.
We came into the year a little bit uncertain. Would they reaffirm CapEx and data center spending? Is the revenue
I'm
earnings
stuck.
meet expectations? They have far exceeded on both.
It's okay, it's an
fronts.
eval.
The CapEx spending not only met revenue and earnings guidance, probably exceeded that as well. So this is a story we think has legs. We think investors need to have exposure. It's a long-term secular story in AI
market is
technology.
trash.
Now, we continue to believe, though, that over time, it'll not only be the infrastructure players of AI and technology, we will see the sectors that will
Okay, I
benefit
just
from
want to get out now.
productivity,
There we go. Come
whether
on.
it's healthcare, whether it's industrials, whether it's financial services, they should all play some participation or have some participation in that. In those gains as well. So
I'm not
we
getting out yet.
continue
I'm
to like the broadening
165.
theme, especially if the Fed is cutting rates here. We think tech and non-tech of the parts of the market will participate.
Interesting piece in the Times.
I'm long. I'm not short though. I'm long.
Which are running
No, I'm
CPI,
long.
in large part because data center is going to take maybe 12% of the nation's grid in a few years. Ken, do you think they can both coexist? This run up by the
I'm getting.
giants
I want
to
a 65.
power without creating inflationary
Order
pressure?
There you go. There you
Yeah,
go.
it's a good point. You know, look, I think
I
we
got
need
it.
to build out that electricity capacity, the energy capacity, the data center capacity, so that's in build mode. I think some of the CapEx benefits we're getting from the tax bill, for example, will help incent that. The inflationary story remains to be seen because on one hand, the AI and technology will help bring down inflationary pressures. It'll make costs more effective. On the other hand, you have the electricity and energy prices that we need to manage.
But do you think margins benefit from would-be
Nah,
productivity in 26?
that's how you blow.
I think we should start to see it in 26.
Yeah, that's how you blow. What the hell? It was down almost 1,000 with like 20 points.
Needs to happen to see that margin expansion? Does the technology need to be better? Do CEOs need to be more comfortable with it? Or does the
Order
broader
filled.
environment
Again.
Order
to the
submitted.
point where they're kind of forced to make these
Order
decisions,
canceled.
laying off people and replacing them with AI?
Yeah, you know, I think we're already seeing a little bit of that story play out in the labor market front. We are seeing a lower labor force participation, but even with some of the immigration policies, perhaps a lower labor force overall. And if you need to keep up your earnings growth with a lower labor force, productivity gains have to come into play. And I think using technology to supplement some of your, labor is probably the trend we'll see starting next year and continuing in the years ahead.
Yeah, it's a big question whether kind of executives and boards and CEOs will be forced to make
Go ahead,
these
sure.
decisions, or whether they'll do so kind of at their own choosing. Thank you, Mona.
Thank you, guys.
Just over 30 minutes into the hour here.
I mean, the bus short 883, so it's not that short, but that's short from like yesterday
is
afternoon.
investigating the company over their
I think we're
advertising
gonna pump. That's just me.
practices. Those shares down more than 2% right now. Morgan Stanley out with a new bull call on Apple, not helping shares this morning too much though, down about 0.3%. Morgan Stanley is saying, quote, the Apple story could
Look
be
at that
turning
long.
a
Look at
corner
so good.
and is one potential AI partnership away from breaking out. And watch Target shares downgraded to underperform by Bank of America ahead of their earnings next week, as they argue the retailer is falling behind its peers and faces a number of headwinds between tariffs, competition, slowing digital sales. Those shares down
Your
about
mic is low. You
1.5%
gotta speak up.
right now. Here's our roadmap for the rest of the hour. The Trump administration reportedly considering taking a stake in Intel, but we have someone who says that may not solve the company's biggest problems.
Plus, the Buffett boost, United Health shares surging in early trading after the legendary investors company revealed a new position in health insurance.
And CoreWeave continues to crater, down 25% now on the week, following those quarterly results and the lockup expiration this week, as the Dow has lost some steam as well. Only 60 points higher now, even with UNH effect in place. Let's go walk on the streets back after this.
Again? Man, you are killing it. Nice.
Team of 5 grew to an army of 500. And that's your logo.
Nice.
Right there
Still,
in
you are
Omaha.
killing
That's
it.
big. To grow your business from big to bigger, you need an advisor built
They
for
pay
middle
fast,
market.
yeah.
Our data shows that this deal works.
I haven't touched my Lucid yet.
Very interesting.
I did tell you 50%. I've been taxing your cell phone, dude. It's not gonna come back. $75 for 50K free activation. You should just load it up.
Using Workday to handle all our AI agents.
Well, watch me handle my agent, Gary. Bubbly water, no bubble.
And Lucid's legit, and I know those people, so we'll get our money, you know? Yeah, you can get used to it. Well, you gotta get one to test it out before the challenge. See, I got all this, I'm just gonna save it. No rebuild, you don't have to touch it.
Memoir is out today. They look at me like, I now know you.
You're not talking about basketball.
And then the best thing is, if you blow it, leave it there and wait for like a 50% reset promo, like a couple of months later, and just reset it instead of buying a new one.
You should be concerned with the companies that don't come on. Squawk Box.
Squawk Box, weekdays 6 a.m. Eastern, and streaming on CNBC Plus.
Today, let's paint with Bear, America's most trusted paint brand.
Wait, we don't have Bear.
Do we need that?
Well, this year's a paint and primer.
It just says ain't.
You bought ain't.
Oh, we do have a Lucid 100K on YouTube later, okay? So don't forget.
Like a lot more.
Maybe you can win that game. That'd be cool if you do.
Don't overpay for your next project.
But Leo's cool, dude. He sent me the fund last night. I was sleeping. I woke up and saw the fund. I was like, hell yeah. One of Lucid's people. So we got $1,500 for the prize now instead of $1,000.
Bullets get excited when
Yeah,
you
yeah.
go bigger.
My boy.
Yeah, you might fall down, get scared, but you always know where to go to feel it. Out of all the best parts of being little, that's the very best. Little sleepies.
And you gotta
please
post those
play with
payouts on Twitter
Shares of applied
and
materials
show it off.
digits
Man.
post earnings, hitting a host of
You're
other chip
killing
names
it.
today. Our
You
Christina
should be
Parks Nellis
proud.
is here to break things down, talk about what happened in the
But it's
quarter.
a-
KP.
Hi. Good morning.
It's your third payout though, like total, right?
Earnings aren't just a
With Lucid?
company-specific problem, though. They're
This
really
one coming up,
it's a
yeah.
warning sign for the entire semiconductor capital equipment
Yeah,
sector. What I
you
mean
should
by
show
that,
it off.
companies
Be
that
proud,
earnings
man.
call, for
Not
example,
many people get that kind of shit. That's real
the
good.
prize revenue shortfall stemming first from China. So management warned that after 2 years of spending in 2023, 2024, they're expecting a slowdown in 2025 and to continue for several quarters.
How's your
Secondly,
TPT?
they're seeing weakness from leading edge customers. They're calling it non-linear demand, which really just comes down to one player, Taiwan Semiconductor.
It's fine. I thought you'd be the one milking the TPT, but you're milking the other firms.
Taiwan Semi, TSMC, wields all the power and can really dictate to equipment companies what they want in terms of demand, which is why the company warned that it was
Oh, we
lumpy.
can do the
A
150
lumpy.
TPT
Applied
too
Materials, though,
giveaway
the only company
on
to
YouTube.
explicitly warn about the backlog of pending
I can't long yet. I gotta wait for a dip.
with the U.S. government. The CFO stating on the call that they, quote, assumed none of these licenses would be issued in the next quarter. Seems like only AI
But the
darlings
short
like NVIDIA
is
and maybe
pretty
AMD
good
getting
looking
preferential
on a
treatment
15 minutes
as the
though,
administration
so
has to really sift
Rose
through
is pretty
a pile of
correct on
paperwork,
that.
all of these licenses in order to ship goods to
No, I
China.
never did.
Applied Materials warning, though, joins the pack. KLA talked down China demand for the rest of the year in their earnings report. Lam Research talked down the December quarter, expecting flat growth.
Yeah, yesterday I was shorting. I was holding for a long time.
To fiscal 2026 growth.
Today I was buying
This
the
may be
dip.
more than just cyclical noise. It could be evidence that the spending cycle may
Yeah,
be
after
oversold
3
as
hours
they
it got
move
out
from
green.
China, but of course,
It was
ripple effects that
good.
we're seeing today in all of the peers like Lam, KLA, and ASML this morning, guys.
Yeah, and Christina, just the fact that it is affecting all of them, it doesn't seem as if the market is saying, oh, this is a market share issue
we're
and
way
somebody
out,
else is
start
going to get in
the
there and actually
$100
take
giveaway.
this business. This is just like a net reduction in expected
these names in.
capacity addition, specifically in China.
Yes, exactly. I think the surprising part of the earnings call from Applied Materials was that they were not expecting this. They were almost taken aback by this revenue windfall.
We get
And what we
900
saw is
something.
that in
I might short.
2023, 2024, China was really ramping up their semiconductor manufacturing processes over there. And now we're starting to see that slowdown. The question is it just going to slow down in regards to the semi-cap, lagging edge stuff, or is it eventually going to trickle down
we're
to
not supposed
all
to
the
force
other names,
anything.
networking names, data center, maybe not AI, but everything that isn't AI.
You're doing good.
Right. Obviously, market is acutely focused on all of that.
I'll spit it out.
Christina,
Work
thank
on the
you.
eval.
One chip name rallying today, Intel. on a report the Trump administration is considering taking a stake in the
coffee,
company.
okay?
Matthew Bryson, Wedbush Securities Research and hardware analyst, joins us now. Matt, just frame it out for us in terms of what
I'm
this
up
might mean for
$9
Intel if it were to
PPT.
happen. It would seem like it would be kind of a national champion.
That's
It would
payout.
assert
I got
the
one more day on the
government's,
payout
thought
for
that it's in the public
what is
interest
it?
to make
Black
sure
Line
Intel
Futures.
can produce domestically.
Yeah, certainly.
Two. I had 3 minutes, 50K. Goo blew it up for me. Tell me to go short. Yeah, that motherfucker.
Intel has simply been that they overspent the last couple of years, that their balance sheet can't support their future
Still won
development.
at 150 though.
And the government coming in would resolve that issue. The problem, however, is Intel right now faces a technology deficit versus Taiwan Semi, and it's unclear that even with a better balance sheet,
I wonder if
they're
Van
able to
got
fix
caught.
So they're not able to necessarily fix
Yes.
that piece of it. But does it change the equation at all in terms of the overall corporate priorities of Intel? I mean, what are they trying to do? There's been thoughts about spinning out parts of the business, and then kind of where would it could have locked Intel in terms of having to spend? I mean, I think the concern would be if this were to compel Intel to continue investments in non-economic projects.
No, I mean that's exactly it, right? So there have been stories about the board wants to divest the foundry piece or the fab piece. If the U.S. government's going to invest in Intel, are they able to do that? Because without Intel chips, then there's really not a foundry customer. So yeah, it certainly adds another layer of potential difficulty for Intel in terms of limiting its optionality, if you will.
I wonder what you make of it at the same time that we're getting other competitors having to pay a percentage of their export revenue. I mean, it's an interesting. I mean, the two dynamics: the support and capital for one, and taking revenue from another. I just wonder: do you think the government is inserting itself too aggressively?
So I think that's a potential problem. So clearly TSM has a technology advantage. If you set up U.S. industry where it becomes hard to work with Taiwan Semi, so someone like
you didn't blow it, right?
Can't take advantage of Taiwan Semi's better technology, then you create a potential opportunity for non-U.S. competitors to come in.
You can still come back. Don't force the trade yet. Just wait.
So for me, it is a potential concern, depending not so much on whether the U.S. invests in Intel, but
I hate Friday, dude. Sorry, man.
Step for the U.S.
What do you think this means then for tariffs? The government is currently doing this Section 232 investigation into the national
I hate when you click the wrong one. That happens to me on my Tradeify. I had 5 NQ instead of 5 NQ, and I have to do that within seconds.
Position on the basis of national security, does that rule these kind of 232 tariff implications as not as
Well, he went down 1,000 though. It came back to negative 300, so he just got out. I mean, he could have got it even, but still.
In the sense that it appears like the U.S. isn't tariffing certain companies based on their decision to invest in the U.S. So you look at someone like Apple. Well, if Apple's buying chips from Qualcomm, they're being fabbed at TSM, but it's not being tariffed. Then effectively TSM isn't being tariffed on those chips. And so it's unclear to me with all these tariff exemptions who ends up getting tariffed versus who benefits. It sounds like we'll get an answer in the next 2 weeks. Originally, it looked like Intel was going to be a huge beneficiary, or
we have about 3 Alex in here.
Beneficiary now, I just don't know.
Yeah, struggling to understand, as you say, as we all are. Matt, thanks a lot. Appreciate the time.
United Health shares jumping as Berkshire Hathaway reveals a new stake in the insurance giant. Warren Buffett's latest moves this quarter. Plus, the volatility playbook when it comes to big tech, with one portfolio manager who says a bet on Amazon and Microsoft is a good spot here. And the lockup on CoreWeave shares expiring with the stock down more than 20% on the week. Big show still ahead. Don't go away. Evidence in our law cover up.
I hope people
Let me add Alex into it. Just finish the started. And just chopping around. You thumbs up, right, Gambit? You did, or did you?
I know we're prepared. We've done the hard work. We're gonna keep
It's
getting better.
the giveaway, the $100. Yeah, it's a few days ago.
Financial future is their advisor.
Okay.
Who's building a portfolio designed to meet all their needs. And behind their advisor are Vanguard's institutional quality bond funds, powered by a deep bench of experts who have
I wouldn't mess with that.
fact is, 90%
He got the Doc got the freebies, that's why. But the activation fee is not that
Are
cheap.
you backed by institutional quality bond funds? Vanguard.
Okay, let me pick the race real quick.
I wish I could get implants. I wish I knew who to trust.
I'm not looking for another quick fix. I want a smile I know will last.
Clear Choice Smiles are made to stand the test of time. They're built by dental implant experts, backed by 20 years of pioneering research and a lifetime warranty on premium arches. Our smiles are built for life. Schedule your free consultation today.
For type 2 diabetes, once weekly Mounjaro could help. 3 out of 4 people reached an A1C of less than 7%. And people lost up to 25 pounds. Don't take Mounjaro if you're allergic to it, or if you or someone in your family had medullary thyroid cancer or multiple endocrine neoplasia syndrome type 2. Stop and call your doctor right away if you have an allergic reaction, a lump or swelling in your neck, severe stomach pain, or vision changes. Serious side effects may include inflamed pancreas and gallbladder problems. Taking Mounjaro with a sulfonylurea or insulin may cause low blood sugar. Tell your doctor if you're nursing, pregnant, plan to be, or taking birth control pills, and before scheduled procedures with anesthesia. Side effects include nausea, diarrhea, and vomiting, which can cause dehydration and may cause kidney problems.
I can do diabetes with Mounjaro.
Pay as little as $25
Here we go.
per month.
What the hell is this? I don't know. Look at that teacup. I don't see you, Gambit. It's so cute. And she was pumping. No. Uh-oh, Alex Big Booty's going in. Wow, look at Milk, way above there. Man. No, yeah. Look at Raid. Dang. Oh, Gambit, look at you. You up there. I saw you. You're in the bottom now. Yeah, you were up top and then you went back down. It's always the last 10 seconds when Cat Daddy's pumping it up. Oh, no way! Cat Daddy, he lost it. Wow, I saw the whole thing. Cat Daddy. Wow. Yeah. That's the first one. I gotta redo another one because it's $50 for this one. Race again.
rough patch when it gets dislocated. And I think what's also interesting is the name has revived. So it did get washed out super cheap. You couldn't get worse news flow, obviously, surrounding UNH recently. Now the question is from here, given the downside adjustment in earnings expectation, nobody's expecting like a quick swing. It's much more about long-term repair and the idea that the underwriting cycle is going to swing back in favor of UNH. We're going to be a little more rational about things with Medicare Advantage problems, making it to get ironed out. A lot has to go right.
Good job, Gal. I'll send you the $50 after this. Oh, Jay-Z.
It's a pretty small position in the scheme of Berkshire.
Kelsey.
Pretty small percentage of UNH that they now own, but it's still, without a doubt, interesting that you did see a name that people were thinking might be in I've seen Cat thrown around today. It's hard to argue that would be as cheap as fantasy would like. I think Deer gets thrown in there a little bit. I think people just are trying
21. Oh my gosh.
absolutely great American name.
You got out, right?
The consumer staple side, which is interesting, because they just took that news right down the crap lines. It's been an area.
Oh, the contract. Yeah.
Those stocks have been awful, especially.
Dang, everybody's having an issue today. You, Israel. Alright, 15 seconds. Oh, look at Alex. A big old swole melon. Oh, teacup one. Wizard. Okay.
All right, we got some news out of this time. That's for sure. All right, time now for CBC News Update. Silvana Hanau has that for us. Silvana.
Hey, Mike, good morning. The Attorney General for D.C.
Yeah.
The Trump administration today challenging its takeover of D.C.'s police department. The lawsuit argues the president's order, along with an order from Attorney General Pam Bondi, claiming federal control of the force is an abuse of the federal government's limited temporary.
We still got another $100 Monday.
It also says
So the next one we're doing later today will be the Lucid.
puts the safety of D.C. residents and visitors at risk. The United Nations talks on creating the world's first legally binding treaty to tackle plastic pollution ended without an agreement. Delegates said the divide came over whether to limit plastic production or complete recycling to better clean up waste. And Tropical Storm Erin is expected to strengthen into a hurricane today as it approaches the northeast Caribbean.
I can trade now. Let me know you're short again. I'll join up.
2025 Atlantic hurricane season, and the storm is expected to remain over open waters, but forecasters have warned of heavy rains today in Antigua and Barbuda and the U.S. and British Virgin Islands and southern and eastern Puerto Rico. I'll send it back to you, Carl.
All right, Silvana, thanks. After the break, Janice Henderson stocks to watch with one portfolio manager laying out his top picks from big tech to big banks. Still to come, the president, as you know, and Russian President Putin preparing to meet at a military base in Alaska today. We'll talk about what investors need to know as we've lost a little ground here. Dow now up 24 and only 2 sectors on the S&P are green. Stay with us.
Sarah Benzino, Brandon Coley, Jablonski Auto Body, LLC.
What'd she call her?
Oh, you mean the Bugatti Auto Body LLC?
We actually sold the twins' naming rights.
You know, like stadiums do. Kids are so expensive these days.
Oasis Breeze, Tan, and Spa.
Need a tan? I'm your man.
Or we can look at some investment options for you.
Works for us. The right money moves aren't as absurd as you think.
Payout denied. Oh, they did that last time, didn't they? Yeah, that's fucked up. That's a good short you guys did. Good job.
You buy low, sell high. Jump on that trend right away. That's not how investing works. Wealth isn't won in a bet. Luck is not a strategy, and success demands discipline. You're serious about investing, right?
Kick back when you fake like that.
Oh, what up, buddy? I'm just paying people right now. How you doing? I'm all green. Pretty good. Are you gonna do the Lucid tournament? No, do it. It's fun. Do the 150. All the big players are doing the 150. Oh, you don't? Oh, I thought you tried like the big ones.
Flavor for every craving in Texas. Just one more reason.
Join up, dude.
Everything's better.
We got a lot of work to do. Diving headfirst into cutting-edge science to uncover 3 secrets.
Yeah, you've been killing it, though. Milk all of them.
Presented by Columbia Sportswear. Engineered for whatever.
Have you traded on Lucid yet? Oh, no. Oh, no, not yet. It's coming in. Well, let me mute my mic.
This morning. Good to see you.
Hey, good morning, Carl. Thanks for having me again.
Before we get to individual names, I'm guessing that double-digit earnings growth affords you some opportunities overall, right?
Yeah, I think it's been a strong second quarter. I think the S&P 500 earnings were up around 13%, and that's following on first quarter up 16%. So the estimates for 2025 now are still in that 12 to 13% range. And what's exciting about that, too, is we've seen a broadening out of the companies that are contributing to that earnings. Not only is AI infrastructure and semiconductors driving strong growth, but we've seen it in financial services, we've seen it in consumer, and in some areas of healthcare. And so that's encouraging to us. We continue to believe that earnings growth will continue, and we are optimistic about the market continuing to go higher.
Right, and so you do like, naturally, in AI infrastructure, some of the big names like Amazon and Microsoft. But of those other buckets you mentioned, what comes to mind first? Is it capital markets?
We do. We are optimistic on capital markets. We think multiples are still in an attractive range, and we think the activity, both currently as well as kind of going forward, will continue to be impressive. You've seen some impressive returns in some of the recent IPOs. We think uncertainty in general in the economy and the market is moderating, and so we'll see more of that business that's in the pipeline come to fruition here over the coming quarters. And so we remain optimistic about companies like Morgan Stanley and Goldman Sachs, who are really well positioned in this environment.
I mean, certainly you see that they would be beneficiaries of, persistence of this type of environment. But you mentioned that you think valuations there are still, pretty attractive. I mean, it seems like they're trading pretty high relative to their own histories, each of them above 2 times book value.
Yeah, so I think the business models have changed over time. They've become more consistent. So the trading revenues have been more consistent than we've seen from volatility in the past. Both those companies have also built strong wealth management businesses, which are also consistent over time. You see a more favorable regulatory environment, which is enabling them to return more capital back to shareholders. So we see the potential for multiples to at least hold, and then earnings growth to continue to drive returns. But I also think there's a potential for them to see multiples expand as well.
I'm curious to get your take on travel, because I would argue maybe some of the corporate guidance out of the travel names this quarter has been maybe a little choppy. I'm thinking of an Airbnb, for example, although we were just noticing the Jets, the airline ETF, has had a pretty good week. What's your general sense about the trajectory of the direction of travel within travel there?
Yeah, so we still think it's positive. You know, you look at companies like a Booking, they had 8% room night growth. You know, Delta and United both had more positive commentary about the second half of the year. And so we've seen positive fundamentals.
You all
continue
green,
to
man?
think that over time experiences are going to grow faster than goods. Consumers want to continue to get out there and experience the world. And so we continue to be optimistic about travel. And you're seeing what we think is attractive multiples in that space. If you look at it in general, you know, around 20 times for most of the companies in that space. And so we're optimistic. You know, a company like Disney, which had really excellent performance in both their parks as well as their cruise lines. And so that continues to give us confidence in that area of the market.
I'm curious what you make about software right now. We were pouring through the 13F filings yesterday and saw a pretty noticeable trend from the second quarter where a lot of the big active managers were rotating out of software, favoring chips. And as I look at your top holdings in both your growth and income fund as well as your balanced fund, it looks like there are some chips, but not much in the way of software as well.
Yeah, so obviously Microsoft is a big position of ours, a big active weight, and so we continue to be optimistic on their software piece, but also the AI infrastructure part of their business. But yes, we're in an interesting period for software in that there's a lot of uncertainty around how AI will impact their business models going forward. Will it reduce the number of seats that are required? And so it's really important for investors to differentiate between those businesses that we think will continue to be relevant in an AI period where they're leveraging AI to improve their products, as well as becoming more efficient internally, but also the companies that are at risk of AI cannibalizing their businesses. And so it's important for investors to differentiate. And I think given this period of uncertainty, you've seen multiple contraction in that part of the market. And so you have to be very picky in parts of the market. We do like companies like Intuit and Microsoft, as well as Oracle in the software space, as we think that they're well positioned in this transition period, as we see, you know, AI continue to transform business models.
Yeah, we mentioned earlier this upgrade of Salesforce, sign that maybe some are hunting for some value in that space. Jeremiah, have a great weekend. Always good to talk to you. Thanks so much. Jeremiah Buckley. Getting some news on Pfizer this morning. For that, we're going to turn to Angelica Peoples. Hey, Angelica.
Hey, Carl. Well, Pfizer's saying that one of its drugs for sickle cell disease has failed a phase 3 trial. Now, this is, you know, their hopes were particularly high for the sickle cell portfolio, but this is still important for Pfizer because if you remember a few years ago, they spent about $5.5 billion to acquire a company called Global Blood Therapeutics, and the deal has already soured because Pfizer had to pull the only approved medicine from that drug, Oxbryta, from the market because of safety concerns. And as part of that deal, they also had some other drugs in the pipeline that they were developing. And so now this failure takes one of those drugs out. And there's still one pill that they're developing.
Should we go ahead and just do the Lucid giveaway since just barcoding? Yeah, let's do it.
Look for Pfizer in that deal. But you can see the shares are basically flat this morning, guys.
I can do the TPT 152 since it's Friday. Give it out what we got.
Acquisition, and maybe hopes aren't that high for it, but where does that stand in terms of what stage of development?
Yeah, that's in phase 3. So again, it is late stage, and it could always hit, and it could have a big impact. And here it's, you know, I want to talk about sickle cell for just a second because it might not be a disease that people are familiar with, but this is a blood disorder. It primarily affects Black people, and there really are not a whole lot of great options for it right now. And the reason that people are so excited about what Global Blood Therapeutics has done is that they're developing pills and other drugs that are easier to take. There are some treatments that have been approved recently, but these are more intensive. So think of the drug from Vertex, for example. That's a gene editing treatment that requires, you know, a month in the hospital, and it's a one-time treatment, but it's a really intensive procedure. And so people are hopeful that Pfizer and other companies might be able to come through with something that's a little bit easier for patients to take.
Got it, Angelica. Thank you. President Trump heading to Alaska for what he calls a high-stakes meeting with Russian President Putin.
It's set up now. Just get your tickets in.
Check out shares of newly combined Paramount Skydance surging on the week on the heels of that.
I'll do TPT after this too.
The UFC stock is about flat today. We'll discuss with UFC CEO Dana White at his next hour on Money Movers. We'll be right back.
real-time exchange
I don't know,
vector
man.
storage
That dude
followed by
is.
second
It's a straight up dude. I'm telling you, it's not a chick.
At AT&T Business, we guarantee our best deals on any smartphone with your choice.
Yeah, I'll wait for it dipped in all
What we
along.
can't guarantee, your employees having a similar work style. You hired them, or your staff, all having the same vibe. I like this style. And your design team being on the same page. Oh, choice.
Yo, that's a good short, you guys, if
What
you're
AT&T
holding.
does guarantee our best deals on any smartphone with your choice of our best plans for any employee. And we mean any.
At Public, the high-yield cash account's a no-brainer. I know my money's working hard for me, and I know I can access it anytime I need it. It's very simple. Better rates mean faster growth, and that's exactly what I need.
I still love to surf, snowboard, and of course skate. So I take Cunol Magnesium to support my muscle and bone health. Cunol's high absorption magnesium glycinate helps me get the
You're
full
green,
benefits
right,
of
Rose?
magnesium. Cunol, the brand I trust.
Ah, what's that supposed to mean? What do you mean? Okay, that's not bad. That's not bad.
We never focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
Meet Luke and Jason from Fire Department Coffee. Two guys with a dream and a little help from Walmart.
It'll take time.
We
Get
make
used
coffee
to it.
that
It'll take
supports our
time.
community, and Walmart's played a big part. You know, most of what Walmart spends was the products made, grown, or assembled right here in the U.S.
Same here.
And we can invest back into our community. Walmart, huh? Who knew? Now you know, Jerry.
And that is how you brew a mighty fine.
Dang.
NBC has announced the date for our next big live event.
Come out and meet your favorite hosts, have some great in-person
Damn, that's
experiences,
rough.
end the day with a dinner and a closing conversation with the one, the only Rachel Maddow.
The MSNBC Live 25 will unite anchors, experts, and fans.
This year, there's something more urgent about being with your people and being connected.
I've been working on the moves. Be ready to tango. Visit msnbc.com/live25 to buy your tickets today.
President Trump headed to Alaska for his summit with Russian President Vladimir Putin. Let's get to Amy Jaffers with the latest on what to expect. Damon.
Yeah.
You technically don't have to spend at all with prop firms. What's his name? He's won a lot of freebies on Twitter and Discord.
Mike, we don't know what to
Yeah.
expect here in terms of this meeting. We do know where it will take place. Take
You
a
know what I'm
look at the
talking
map
about, right?
here and you'll see why this location in
Yeah.
Anchorage was just so convenient for both of these two men. This is going to happen at Joint Base Elmendorf, an Air Force base that's been in activity since before World War II. You can't quite see Russia from there, Mike, but it's not that far and pretty convenient for both leaders to get to in terms of air travel. We'll wait and see what the body language is between the two men. The White House has suggested that this is just a listening session for the American president to hear what Vladimir Putin wants to say in terms of his
Mike
needs
is messing
and an
up.
off-ramp for the Ukraine-Russia war. The question is whether the president himself is a little bit more optimistic than the White House tone has been, because the president seems to suggest he thinks he can get a deal here today. Take a listen.
I think that President Putin would like to see a deal. I think if I were president, he would take over all of Ukraine. It's a war that should have never happened. If I were president, in my opinion, he would much rather take over all of Ukraine. But I am president, and he's not going to mess around with me.
So we expect to see President Trump landing later this afternoon. Then that meeting will get underway. And then on the back end of it, we are expecting to hear at least from President Trump, possibly from President Trump and President Putin together. Not clear on when that's going to happen or if it will happen before before the end of the business day here on the East Coast. But clearly the measure of success may be whether you see the two men standing shoulder to shoulder after this meeting or just Trump by himself. One interesting nugget, guys, the Treasury Department had to issue a temporary sanctions waiver to allow the Russians to spend money related to this trip to the United States. That sanctions waiver goes through August 20th. Guys, back over to you.
Speaking of Treasury, Eamon, he is being accompanied by the Treasury Secretary and the Commerce Secretary, which has led some to wonder whether or not the administration is interested in offering
let me unmute you,
economic
Google. Hold on.
incentives, less economic.
Yeah, your music is still, it's the same music, it's still there.
Essentially, whether we're going to buy some piece.
Yeah, look,
There's something wrong with your laptop or desktop. I think you have a virus.
Dollars and deals as a part of statecraft, very much as diplomacy and military force.
How do you record the sound on here so I can play it back for her?
It's better to do deals with people than to have wars. He views himself
Yeah, you got a
as
virus.
somebody who's going to bring peace to this region, and if that costs a little bit of money, he might be willing to pay that. We don't have any information though on what specifically he's prepared to offer. The president has turned down questions related to that all week long.
Oh, you need another Norton? I'll get you another one.
So we don't know what's necessarily on the table. Is that some sort of investment? Is that sanctions relief? Is it rare earth
You gotta stop
minerals?
paying me.
All of
Reloader.
that could be potentially on the table. We just don't know from where we sit here.
Yeah, it's clear each side has different modicums of success here. It's whether they can actually bridge that gap during this meeting remains to be seen. Eamon, thank you. Wave shares down nearly 25% on the week as early investors finally get the chance to cash in. More on the fallout after the break. And as we head to that break,
I think 2000. Yeah, 2000 is the buffer.
the week led by Intel and UNH. Plenty of
You
news
got
to get
it.
through there. We're back in 3.
Yeah, send to wallet, and anything above $250 in your wallet, you can send it to your bank for free. I can't find my Norton. Alright, there we go.
Curiosity like the way. At zero price, we ask smart questions about opportunities like advances in healthcare
Oh,
and how these
dang.
innovations will
Lose
create
it,
a healthier world tomorrow. Better questions? better
The
outcomes.
digital gold, that is data, has never been more important.
I know we're prepared. We've done the hard work. We're going to be getting better and serve our clients.
Stock investors, learning to use options could improve your returns when stocks rise and turn losing stocks into winning trades. Our new book can show you how.
I got the book and I read it in a weekend. And it's just like, wow, on a measurable level, I'm being successful.
I have a couple stocks, but I don't have many of them anymore. It's all options for me.
I highly recommend everyone gets John and Pete's book because there's nothing else out there like it.
Get your free copy today at itsnotanoption.com. That's itsnotanoption.com.
When emergency strikes, first responders rely on the latest technology. That's why T-Mobile created T-Priority, built for the 5G era. Only T-Priority dynamically dedicates more capacity for first responders. Breaking earnings news. Home Depot, Toll Brothers,
We got 20 more minutes, lazy. Gotta wait for everybody to log in, sign up.
your portfolio. All next week on CNBC and streaming on CNBC Plus.
I know what you're thinking. Total glow up. What's her secret? Fine, I'll spill. I totally upgraded with Verizon. Everyone gets a free phone with any plan, even if you're already a customer. Like me. Now I have Google Gemini. It's like a little glam squad in my pocket. Gemini, what eye makeup goes with this lipstick? I'd suggest a classic cat eye. Wow, setting the bar high for daycare pickup. Get in on this.
Release the flavor.
off the back, shares of CoreWeave down about 2% after the company's post-IPO lockup expired yesterday afternoon. CoreWeave included a somewhat unusual provision in its IPO, allowing a lockup expiration for 83.7% of its outstanding stock, or about 401.7 million shares, 2 trading days following the public release for this quarter's earnings. That, of course, happened yesterday after 4 p.m. Now, the typical 180-day lockup period would have been September 24th.
I gave her the
I'm told by
key
several
already.
sources that
But she has a
CoreWeave and its
virus.
bankers were testing the waters yesterday for a slew of potential block sales. Speculation about this contributed to a 15% decline in trading yesterday. Ultimately, I've heard from sources this
Yeah, but she has no
morning that
music
JP
on
Morgan
at all,
sold
like
about
nowhere.
5 to 6 million shares in a block
And it's the
around the
same little
$97
clip
range.
music
That's
over and
pretty
over.
close to where it's trading now. I don't know which investors participated in any of these individual block trades, but that represents a $582 million trade. Goldman and Morgan Stanley, I'm told, also did some blocks at similar sizes and also pricing around that mid-90s level there. And there will likely be
Yeah,
a period of
you
time
can hear
now
her music and my background TV.
so expect to hear a bit more about this over the next
Good
six
music.
weeks or so. CoreWeave declined to comment yesterday. In CoreWeave's case, many of its investors, though, including Magnetar, Co2, even NVIDIA and OpenAI, are sitting on sizable paper gains despite this week's volatility and may have a motive to sell at least some of their stakes, despite, of course, what we've seen, 15% decline yesterday and another 2% today, guys.
It feels like CoreWeave has tested investors' sort of willingness to tolerate
61 tickets for this trade, or
kind of
this
not
Lucid.
questionable, but sort of a little hair on the story in terms of
Good
the customer
shit.
concentration, the
Nice.
financing of a lot of their
Yeah, you can take out
projects
260.
in this early
Good shit.
lockup,
Yeah.
just for participation in this part of the
Don't you have the 150k 150k Pro too, or no?
This is kind of a symptom of staying private for a longer period of time. Is you have a very busy cap table. You have a lot of private investors who may need liquidity here. So you can't necessarily do a more orderly marketed deal as you may be used to historically, where you've got a couple people that come together and agree on a
I
process.
don't want it long yet. 3 minutes gonna go down some more.
also did an early exemption from a lockup yesterday as well.
Oh, wow.
Yeah, they had a lot of insiders that were there for a long time.
Also, people sitting on some nice paper gains on that front as well. Leslie, that's good reporting. Thank you. When we come back, UFC CEO Dana White's with us, breaking down the company's new deal with Paramount, talking about the rise of live sports and the match he might be planning on the White House lawn next year when he joins us on Money Movers after this.
RETX.
Well, you don't have to send it to your bank yet. You send it to the wallet. You just leave it there. Don't try to push yourself and end up blowing.
Explore Paytm ETFs today.
Yeah. All right. I ain't trying to buy the dip yet until we get to a new lower day. Hold on. Let me unmute you. Holy shit, you fixed it. Mugo, say something on the mic. Yeah, I had to do a restart. We told you to restart, dummy.
This is my coffee shop. We just went to
Say something on the mic. Mugo, come on. I can hear you.
for the team. It was so easy. I just chose my products, added our logo, and placed my order. Bring your own team together with custom gear. Get started today at customink.com.
The digital data has never been more important.
I know we're prepared. We've done the hard work. We're going to keep getting better to serve our clients.
I'm trying to long? Don't long yet. Okay.
Works.
What's up, Jay-Z?
Play a game. This is grown-up business.
Yeah, we took a long? Nah, I'm scared of long.
Wealth isn't won in a bet.
Luck is not a strategy, and success demands discipline. You're serious about investing.
Yeah, I think I might drop more.
Gina
I don't know. Lady boy. We'll go.
She's opening her Fidelity app to buy
She's-
that stock with no fees.
Yeah, Mugo, Google, doesn't matter. It's a dude.
Gina's got the look.
100% a dude. I don't know. It was spammy music earlier.
In the markets that day and preparing for tomorrow. I'm looking to talk to
Trying to pretend you don't know how to use the mic. Come on, it's 2025. This is not 1999. Everybody got a mic.
CNBC Plus.
I should have shorted her. Oh yeah, he lives by my sister-in-law. I'm supposed to go there sometime this year.
Luke and Jason. Two guys with a dream of being help from Walmart.
We made coffee that supports our community.
And Walmart played a big part.
Move to the dude.
Walmart spends with the products made, drawn, or assembled right here in the U.S.
No, I promise you, I won't lie to you, dude.
To our community.
That's one thing I don't do. I don't lie. Google, just fucking speak. Alright, we're about to start this race. Let's do 3 minutes.
For plant-based, healthy blood pressure support, there's one brand that stands above the rest. It's Cigarettes by Human, the #1 doctor, pharmacist,
You guys
and
ready?
cardiologist
We're about to
recommended
start.
brand for heart health support. Find out how to get a free month with your first start at livehuman.com.
Good
I
luck.
guess I'm not the easiest person to please. I like things just right. That's why I love Redfin's home recommendations. They know what I want even before I do. A home that's just
That work. Where's me? I wanna see. Damn, I don't see you. I'm looking for the pig.
Sports and entertainment, and Leon's with global superstar traffic. And breaking down investing opportunities, fitness, sports and entertainment. Right now,
Jay's been close to winning last couple races. Rosales is a little goat slow. I don't see you. You're probably at the back. Look where the chicken's coming up. Me love is the goat coming up. Yeah, it's in the middle. It's always the last 10 seconds. That's when they start zooming in. Melody's coming up. Yeah, I don't see you, Gambit. Yeah. You're friends, really.
Many others next week.
Shimu, let's go. This little pig is coming up. Shark. Wow, JJ is actually gonna win. Maybe. Also, YouTube is 4 seconds behind, so I won't tell. Oh, look at me, love. Oh my god, that goat. Look at that goat. Oh my god. Holy shit. I don't know. Mina, no. Queen. I don't think Queen had 25 points. I'm pretty sure Queen doesn't have 25 points. Let me see. That was epic. Nice. Yes.
spending a little bit more.
Nice long. And move that down. There we go. Points. I'm not gonna lie to you. We'll do another one. I'm sorry. You need 25 points. I'm sorry. I feel bad, but not really. But let's go.
Actually seeing the effects of tariffs.
We're going again. Hope you guys win. Yeah, I had to redo the race because the person didn't have any points. To your bank? For me, it takes like less than 1 minute to hit my bank. Yeah, it's fast. Yeah, I did the bank transfer. It's connected to Plaid. Just you do the bank thing and they'll connect Plaid and it goes straight to it right away. Yours? First time she... Yeah, shouldn't take that long.
completion to improve memory, area, strategy for more comprehensive brain.
10 seconds. Who's gonna win? Gonzalez. Oh. Lynn won. Oh my god, Lynn won. And she got a dog. I don't know. I don't think she won last time, did she? No, she didn't win. No, it wasn't hers. No, it wasn't her. Yeah, she won. Good job. Lucidx. Is she? I don't remember. But that one's done.
Yeah.
Yeah.
Better there. Yeah. Never miss a moment.
Yeah, good win, Lynn.
Have borne most of the tariff costs so far.
And she had a dog.
To negotiate lower import prices or to pass price increases along to consumers.
I think they will ultimately cut in
She's on a call, I think.
September.
You sure she gave it out last time?
Early September. I don't expect that. One of the reasons why it's a great investment environment. There's a lot of news.
No, I don't. Are you sure? Not on YouTube, right? I think it was Discord. Later, guys.